Oh, no.
I just didn't figure I'd sit down.
Yeah.
I'll stand back up anyway.
Okay.
This conference will now be recorded.
Okay.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all.
Call the meeting to order, June 28th. We're going to be an open meeting.
You have the budget work session right now, and then at 12:30 you have your regular business,
Regular
which would be
meeting.
where you do your public comments and things
Okay.
like that, so.
So we'll now turn it over to Scott and Lloyd.
Okay. Well, I wasn't sure exactly which way to go here, but I figured out a few things. And I wanted, this plan to action is really nothing to do with the budget in directly, but what it is I had Carlotta at our firm. She's kind of leading up the rescue program, and she was making a presentation to the Nemaha County Commission this morning, and I had her or Friday switch this names to Marion County. So I'm just going to take you through this first. It kind of gives you a little bit of a glimpse of how the rescue program is kind of laid out, and at least we're still waiting on Treasury. So if you flip to the second page there, page 2, this is kind of a tentative timeline for 2021. So counties have, there's an interim report due on counties August 31st. So we've got some business, budget's going on and this is going on, but the first one due for the county is 31st. And then there's a project and expenditure report. And I'm not exactly sure even what the detail, I don't even think Treasury's come out and showed us, it's kind of like Spark program where we had an Excel spreadsheet and they changed it like 42 times from the start to the finish. But this gives you, kind of lays out how it's through 2021. And then if you remember, it actually goes through December 31st of 2024 with some extensions available. And then what we've done here is,
Sorry,
Yeah.
just back.
Yeah.
What actually is due at these periods? Do you have, when it says due date for expenditure and reports?
Yeah,
Are you
so-
supposed to have all your projects in line?
no,
on that date?
no, I don't think so. I really don't know yet. Treasury is still
Okay.
kind of giving us guidance. But
So it's not that we have
So
to
you'll
have
have-
all of our projects lined
It's
up?
probably like
So-
Sparks where you had the items listed.
Well-
Didn't really have anything allocated for you.
what it is, you'll get,
Okay.
got or get
Yeah.
50% of the money this year.
Right.
And then you'll get another 50% next year.
Right.
And the way I've looked at it, we're trying to do as much up front so that we know that, where the projects are.
Right.
So that we can kind of intermingle it with the budget. Because one of the things I think I showed you the other day, like, this is the way I look at it. So if you have, let's just say road and bridge over here, and then you have rescue. That's what I'm calling this. But we have this county that we cannot get convinced that worked on the Spark with us. They're gonna get 1.2 million over here, it's way out west, but they don't wanna receive it. Because they don't wanna go through all the hoops again, they're so burnt out on all this. But the way you have to think about this is since it's a long term, you can't use it for roads directly. But what you have to think about is you have 1.2 over here, so if you can use it on all these other things, really what that does is it frees up 1.2 over here, even though it's an indirect relationship to the road and bridge. And I'm trying to get that across to the county clerk out there. She just does not want to mess with it. And then she doesn't want to put her social security number in. You have to have an individual at the county. Did you have to do that? Yeah, put your individual social security number in. She or the commissioners don't want to do it. So I'm looking, it may get approved through the Kansas Association of Counties and the National Association of Counties Legal Counsel. And I don't know if I want to do this either, but I could put my social security number in there if you would, if not you, but if that county would want to do a resolution and identify me as the person, that is in charge, make sure the reports get done and all that. I'm just trying to get 1.2 million. I mean, I mean, they're citizens. If they didn't take that 1.2 million, I would think they would be a little bit fired up. I mean,
Tina, you had some comments?
Well, I was just gonna say, from the information that I have seen, that August 31st date, for counties over a certain population, they have to have their plan in place
Okay.
by August 31st.
Yeah.
Include, like, that would be Sedgwick County,
Right.
some of those big
big
counties.
counties.
Okay.
The other small counties, and I don't know what that population cutoff is, but we do not fall into that
Okay.
category. So that report for us on August 31st is just showing what we've spent, which
Okay.
should be zero by that
Zero,
time,
right.
because you haven't even met to discuss projects or whatever.
Right,
So-
and that's why I interrupted, is because I
No
wanted to
problem,
know
yeah.
in our.
I was taking the long route
Right.
there, sorry.
No, you have time to develop
Okay,
that,
yeah, okay,
and we
yeah,
don't have to have that in
Okay,
place by the
because
30th.
that makes a huge difference.
Because you haven't told us what
Right.
we can do yet.
Well, yeah, I don't even know.
All right, sorry about that.
And then the October 31st actually ties into, see all the cities, there's a lot of cities that receive it, or will receive as much money as counties. But it's a different process for them, but their first reporting will be October 31st. So I think that's gonna be the main reporting deadline, both for you to Treasury and the cities to the state of Kansas.
Okay, and I'm gonna interrupt again
Yep.
on the cities, because I've gotten calls from a couple of cities.
Yep.
How do they go about their process? Do they go through Tina? Do they go direct? How?
Okay, so-
Because they're all wanting to know.
They gotta-
Absolutely.
They gotta hire him.
Well, what happened is, there's some, I guess I can say this, there's some counties that cities work together.
Sure.
There's some counties that cities don't work together.
Mhm.
So we have a two-pronged approach. So like, if we can get the cities all to work together, it's better for the cities because of the way the fee structure we've got set up on percentages. So right now, roughly, it's 5%, which all the consultants in Canada, those big ones, all that, up to 2.5 million. But then if you add, and this is one of the counties we put into, if you add the cities on top of that say you got 2.5 million, you were 5%. But if you add that on top, all the cities' monies, it goes in a graduated scale. So like the next 1 million would be 4%. And the next, anything over 5 million would be, and we're trying to get the cities, like you're saying, to work with the counties. But some cities don't want to work with the counties. Like, I hate to say this, but like Arc City and Winfield, we do Cali, and they, Arc City and Winfield.
Well, in our case, we've got a lot of little 100 people.
Absolutely.
Small, they don't have the expertise, but yet they are entitled
Yep.
to funding.
So what we did is we went through,
Tina.
oh,
No, that's okay.
Oh, good, no.
Whenever, I do have something to say about this,
Yeah,
but
yeah,
I
that's
don't
awesome.
have to do it right now.
yeah. Just one more thing I want to say.
I just want to make
is-
sure that the towns and the cities have an idea of what.
Absolutely. So in that county that they're interested in having the cities work with us, we made an Excel spreadsheet. We showed what they're gonna receive
Mhm.
and what the cost would be for us to help that city, because like one down in Cali is $11,000, or no, $5,000.
Mhm.
South Haven, I think it is, or one of those.
Right.
And so, golly, we probably can't, $5,000.
You got $8,000 up.
Well, it's gonna eat up, I think the percentage was $500, something like that, I don't know. But we would be willing to do that because we're grouped together with the county, you know, it's a group. So, oh, she left, now I've talked too much. Anyway, it's literally a complicated, but we wanna try to make sure that everybody gets the opportunity.
Yes.
As a
that's
city,
my concern.
yeah, as a city and a
Town.
county, that they get the opportunity to build it. I mean, $5,000 for a city of 100 people?
Yes.
That's a lot of money.
That's right.
Yeah.
Well, most of from what I saw, most of the cities in Marion County got more than 5,000.
Oh,
Over
yeah,
10.
there's.
15,000.
Yeah,
But
absolutely.
again, it's a smaller amount, it's gonna be a higher fee, but
Sure.
there's a process.
But if we can put it
bundle.
together, yeah.
Well, you about have to be, because
Yeah.
there isn't any of those small towns that has expertise enough to,
Yeah,
you know,
the larger
manage
ones
that.
can, but
I mean,
smaller.
like the city of Hillsborough and Marion. I mean,
Yeah, that would be challenging.
Okay, so I got you off track a second time, but let's.
No, you're fine.
I wanna-
Here's the deal you have to think about, you'll see this one in the presentation, is cities have water and sewer.
Yes.
Okay, and they have opportunities there, like Dow just put in a $2.3 million brand new sewer plant.
Yeah.
And so they'll be using it in different ways than
Sure.
you will as a
Right.
county, yeah.
Right.
Oh, is that the numbers?
Yeah.
Okay.
So what I wanted to say about the cities, is I have sent out to all the city clerks, information as I've been getting it as far as what their application process is and those sort of things. City of Ramona was in here this morning visiting with me and.
Sorry, I threw you under the bus on that one.
Yeah, no, that's fine. I have expressed to the city clerks, but they haven't necessarily all passed that along, that if they need help,
Right.
I can help get them started.
So you've already talked to the city of Ramona.
Yes, I have talked to the
Thank
city of
you.
Ramona this morning.
Thank you.
So one more thing to answer your question on that. Last week, we were trying to get the engagement letter if they wanted, or the cities wanted to work with the counties, that's one engagement letter. And the cities that don't want to work with the county, I mean, like where you have just the county wants to work by itself. So that, I think this week we'll have all that finalized. We're still waiting a little bit on Treasury. But I just put this in there, so if we keep going, these are just big picture thoughts, internal controls that we saw in Spark that need to be, to make sure they're in place, you know, that the way you document, you know, and all that. It's just, we're just kind of, these are kind of like best practices. The next page, compliance. There's different types of compliance that we're watching, and that's one thing that most of the counties that we worked with in Spark, they did not want to mess with that. You know, like how you can make sure you're complying with all the, you know, the Treasury rules and the Spark. I mean, I would have never been able to pull this off without the team I had. They were very good. Some of them were tax people that are very meticulous in looking at the, you know, the Treasury regulations and all that. And so this here just kind of shows you kind of an overview of what we would be doing. And we also have worked, on those 17, we can't do the audit because we're the consultant, okay? So we've also worked at detail with your auditor to make sure you get the right numbers in, because most of them had federal, and you will have again a federal audit. Now we're trying to time on some of these. The rule is 750,000 expenditures, okay, before you have to have a single audit. Now that's not just on REACH money, that's on health department. Maybe the sheriff's got some federal money. It's all the different federal money that you have.
FEMA, if we got FEMA.
Yeah, and if you got some FEMA money, if you ever got FEMA money, yeah. And so what we're trying to do on some of these counties, if we time the expenditure just right, so like you receive half the money this year, half the money next year, if we time it over the 4-year period just right, you may never have a single audit. And see, that would save you another $5,000 a year to $10,000 a year on a single audit, because it's based on the expenditure, it's not based on the receipt of the funds, okay? So, and we have some flexibility on Spark. We did not have flexibility. I mean, it was boom, and then you're gonna have a single audit. But on this one, if we time the projects right, it's when they're encumbered. So like if we have an encumbrance on them, then we have to pick up that expenditure under state law. But that's another thing we're trying to work with to make sure that we can cut down the number of single audits. And then these are just some things that, based on COVID expenses, county staff that you rehire, shortfalls. One of the biggest calculations here, and it's not in the slides here, is loss of revenue. And that's the first calculation that we're doing. Maybe you've already, I don't know if you've done it yet, but we have, it's called the, I just found this the other day, Government Finance Officers of America. I'm a member of that. And they put out this awesome Excel spreadsheet. And so Carlotta, who did these slides, she is trying, once we get an engagement letter, she is trying to see what that number is, because that's the first calculation you make, is how much you lost in this whole pandemic on revenue. Some will be higher than others, like, for example, back to Sumner County. Sumner County has the casino in Sumner County. What's the lost revenue in that casino during the pandemic? That's a big number, okay? So it just kind of depends county by county, you know, what your revenue sources are and all that. So she's working through, once we get a contract, she's working through, that's the first step, because we want to know how much we can go back and recapture on that part. And then once we've recaptured that, then we work through all these other things like infrastructure, clean water, sewer. Like Osage County has a sewer district, and they really need some update bad. They might be able to use some of this money to up, because the commission is the sewer district's board. So we may be able to use some of that money to update just that they would normally have to pay for by the county. So Each county's kind of different. Infrastructure, clean water, drinking water, most of those there are you're gonna see those really utilized in the cities. Because what happened is, if you think about this happened in Gallup, most of the water lines were put in the 50s, 40s and 50s. It's like the one on Main Street, they're waiting to do some across the street from me, because they'll have to tear the whole road up, and there's just a lot, it's a big cost. So some of these cities on some of those will probably utilize their money for some of that. And then for yours, it'd be like maybe the broadband, and these are just, literally, this is just a big picture. There's gonna be a lot of other things that come out, because what's gonna happen here, I mean, I can almost tell you, is once the cities and counties get in the middle of this, and they start using it, I don't think you'll ever get back to roads, but you could if enough people griped about it, and said, that's really where our money is, I mean, I could see the federal regulations come out and saying, in these certain circumstances, this is what you could spend it for. But that's why I think they've put a 4-year time limit on it, because if some can't get it spent on some of these projects that got up front, they have a 4-year time period to try to work with that city or county to be able to, and that's just Scott Lloyd guessing. But based on the government, that's the way it works a lot of times, is if enough people say, well, I needed this, and this is really what we're heard for. So, does that make sense? And these are just overviews. As we figure out more on that, we'll let you know. Page 9, I went back and found this last night. I had not updated this since 2008's budget, I think, because I put in 2009 there before I printed. No, yeah, 9's budget, because I was going to start to fill it out, and we're going to mess with it today. But you can see this is pretty amazing. Since '88, that's kind of when I first got involved with the budget. The assessed value was 54, and now we're setting at 160. So almost 3 times the assessed value. Okay, so then you asked me to get with David Arterberry. So I sent this over to Tina, but if you look on page 10, see, I don't know, this statute must have changed since 2001, when you did the road project back then. But if you look down there, there's 2 sentences. It says, 3 sentences. Borrowing money for road and bridge project for county in Kansas is much more simple than jails. GO bonds can be issued for bridge projects, are authorized under that, and they're exempt from the debt limit. GO bonds that can be issued under the same statute for road projects, but they are subject. So that part is still true as it was back in 2000. If it's a bridge, you're exempt, and that's how Osage County does theirs. They go in and do those with the engineer's estimate, and they just do it. On the roads, you come under that. So my assessment is wrong. I read that. I was thinking about this driving over here. I think I did this wrong. I'll show you what I did last night. I finished at 1:30 this morning. I got working on this, and I said, oh, okay, well, this. And then lease obligations, we talked about that. Lease obligations don't come under the debt limit, okay? So you kind of have to look. I mean, I think all of us sitting here are pretty conservative with debt, okay? I mean, the federal government's out of control right now, but I think it's always kind of been that way in Marion County. So I know when they made that decision in 2000 to go and max out the debt limit, that was a huge decision for the commission to make that, because they really never had a lot of debt. And that was kind of even before lease purchases really took off. Lease purchases kind of got their wind there in the wings in the 90s when the first tax lid was there, because that was a way to go around the tax lid by getting the debt. So I guess I'm telling you all this because what is your debt appetite? I don't know the number, but David said he would get back with Tina and come up with whatever numbers you need, whatever we come out. I told him I was meeting with you today, and so here's what I pulled out. So I'm just going to give you some. I don't really have any exact answers, but I want to show you. This is the way it started in 11. This was the capital project or capital improvement fund, And you can see how, I think 3 was one of the first, 2 or 3, there was one of the first years. And then what we did down at the bottom, like I was telling you, is we listed off all the roads that were a part of that first 2 or 3 years where we started coming back to them at some point and, you know, resurfacing them, putting a 2-inch on there. Now, I don't know your road, I know your roads pretty well. I've driven them, not in the last probably 5 to 10 years, but when I was going through a lot of this back in the 2000s, I've driven most of your roads that are the big names, just to see what they were talking about, just to get a, you know, I'm a visual person. But you'd almost have to go back to that. I don't know if you go back to the 48 miles. It was, I think it was 48 miles. Was that what it was?
60, I don't know.
Yeah, something like that. You know, I don't know, I guess, where the direction you want to head there, and with the price today, you can see down at the bottom there, I left it on there, 45,091 per mile were the original numbers, and an overlay was 25,000. So that's a little different. But you know, this is just, I just wanted to show you that. And then the next page, what I did, I think we did this in, I left the dates on here, July 31st, 2015. I think at that time, and I don't remember which commissioner this was, but they wanted to know how are these roads getting paid and what funds are they coming from? So I left this in here to show at that time how each of these, you know, like whether it's road, actual bridge money or road, or it's equipment over there in F, you know, kind of the cost of how your road and bridge has been funded in the past. And then I just was messing with numbers on what's called T-value. It's an amortization software. And so I literally, this was, I was telling the ladies on the way over this morning, I just picked a number. I said, okay, $10 million. Now, your debt limit will have gone up a lot from what it used to be, okay, because your value, it's all based on value, and it's based on, I think 30% of your motor vehicle value too gets added to that. But I don't know if it's 10 million, but I just used 10. So I guess I put 10. So if you look at this at 2.5% on a semi-annual payment, it's 562,000, okay? If you look down there to the first year that a full payment is made, it's 1,124,000. So I had this idea, I go, oh wow, wouldn't that be pretty cool? If you really wanted to lock in where the roads that you want locked in, because right now, the way the capital improvement fund is set up, that money is general fund money, and it literally could be used for anything, depending on who the commissioners are, it can be used for anything. But if you as a commission, and this is where your debt appetite, you'd have to, if you want to go this much debt, is your debt appetite, if you wanted to, and 10 million just happened to work, is the 7 mills, and you'll see this, okay? The 7 mills, if you look, and this is one I scratched on a little bit, on 15, if you look up in the right-hand corner, $10 million of bonds at 2.5% for 10 years, 7 mills is 1,122,457, based on 160,000, your new assessed value. I just picked this number out of the air, and I'm within $2,000 of the payment of the 7 mills, and what 2.5% would be on $10 million. Now, 10 million is probably a little high now that I'm kind of misread the way that statute, what David said. So what I did is I went back and I just messed, I kind of took some of the things in the past, I put it over here in this worksheet. I just kind of showed you so you kind of feel, so if you look on page 15, if you start up there at the top on 19, you had 3.8 million. That was a year that you only made partial transfers. It wasn't the full amount, okay? If you go down that first column, and then you didn't spend anything in 19, and so at the end of 19, you had 4.2 million. You see that? Okay, then you jump over to 20, and in 20, you did make the full payments, 982,280, and you come down and you spent, and I didn't put the roads, I don't think it said in what I had, the roads, but you spent 745,668 in 2020. So at the end of 2020, you had 4.8 million. So we're in the middle of 21 now, and I didn't have the numbers last night when I was messing with this, but if you had the same amount, and it would go up I think it will go up a little bit there, I can't remember, no, it didn't, because the assessed value stayed the same. That's why the.
It went
Oh,
down.
it went down just a
The
little
assessed value
bit,
went
yeah, it went down just a little bit. So that's why the numbers didn't change much. And then, if you go to 2022, you'll see that the numbers went up because of the 160, they went up a little bit. Now, that's when I dropped in, so like if it was $10 million and you have bond proceeds and you have temporary notes, typically is how they do it, they'll issue temporary notes, you'll do the project, and you'll do temporary notes all the way through to the point where you have the construction done, and then that's when they'll put the bond out on market. So, right now, I don't know about road project, but on Osage County, the one that'll be finalized on the bridges this month, I think, or in August, their rate on 1 year was 0.17, and on the whole project was 2.02 for almost $5 million, no, almost $8 million, okay? Because they had bridges and they rolled in some of their old debt. But you can't guarantee that, because I'm not sure how long it would take to get, if you did have $10 million of bonds, to get the roads done in order to get through the temporary note phase to the point of having the bond ready. Because if it's 1 year or 2 years, that rate, I can't tell you, because the month of May, the inflation rate, my son was just telling me this the other day, he's really into this stuff now, was like 6.6%. I mean, it was an incredible number, and if you annualize that, so the rates, they say they're gonna hold them, but who knows? I mean, this is a really crazy environment we're in. So that's why I can't sit here and say you're gonna get 2.5, because the temporary note phase of any large project, and this, with roads especially, is probably 1 year at least, and maybe 2 years because of the winter.
Well,
You see what I'm
that's
saying?
what bothers me, because the Fed has politicized the inflation rate. They say it's temporary.
It's only gonna be
But
3%
yet,
next year.
people that I know that's in the know say it is not temporary. But as long as they keep saying that, they're gonna suppress the rate.
Okay, so here's what I was thinking, whatever that number is, 10 million, 8 million, I don't know. If you go down in the right hand here, I was wanting to make sure if we funded the bond and interest fund for 10 years with a 7 mils, okay, and just tied it to that, and locked it in so that you got all your roads fixed that you wanted fixed, the main roads you wanted fixed. It's locked in, it's kind of like back in 2000. But you have to have a way to actually keep them updated, and you gotta do all the other, like chip and seal and some of those. So what would be left if you did the 7 mils up above there? Down below there, I've kind of made just a few numbers there, is 2 mils from the 80% would be 320,703, and then the 80% of sales tax left over in the general fund, which they've used in the past for coal mix and all that, you would have about 620,000 there. And then the line items that you have in the road and bridge fund, not the 26 million, the 1.5 and the whatever you choose, 750,000. Those dollars would have to be allocated to make sure you keep up with all the other, like the other, whether it's chip and seal, coal mix, all that. So we would have to do a few calculations with the engineer. I'm doing this literally as an accountant, okay? So the road engineer would have to look at this and say, what works, and do we have enough split off over here on this 80% and those numbers to take care of, plus the road and bridge budget, to take care of everything else if we allocate the 7 mils to a debt payment. You see what I'm saying? So I didn't want to go any further than that, because I messed with it a while there, but to me that's one workable solution, and it's somewhat like back in 2000. You have to come up with the roads that you think are those key roads. Are we gonna spend the money on that? It's kind of like, I don't know that, what was you said, 6 inches was on the Tampa Road?
Yeah.
That was 6 inches, I don't have that sheet, but well, maybe I do. 6 inches is like 300,000 a mile? Is that what? I think it was something like that, 300,000, or maybe even 400,000 miles for 6 inches. So you'd have to figure out which roads needed 4 inches, which roads needed, or maybe base work, and then which roads. So the engineer would have to be literally totally involved, and I think David at Arterbury could get that number fairly quickly on what your debt max would be. You see what I'm saying? Does that all make sense? I mean, I am rambling here.
One other thing on here,
Yep.
you know, he's saying that if we don't use that particular statute,
Yeah.
that if you did a charter resolution, we can issue a GO bond for road projects under a different statute, and that is exempt from the debt limit.
Yeah.
So that would be a charter resolution, which would have to be published and be subject to a protest
Yeah.
petition. And if there's a petition filed, it would have to go to election. But
There's usually a way to get around most things. I mean, Dave and I have talked about this quite a bit, and I don't mean get around, I just mean,
work with.
They can do it.
Okay, now I was told the other day that government accounting is swampy accounting at the Osage County Commission meeting, okay? I know, I started laughing even this weekend. I was going, I've been doing swampy accounting for 37 years. Anyway, so I think there's ways to do this. It's just back to that debt appetite. You know, if you're really wanting to, because this does not include, what I decided to do, I was going a pretty good roll last night. I was gonna take all the line items where we've set aside building dollars, you know, like we put it over at the side, and I was gonna make, Tina and I talked about this a little bit, is if we had a capital improvement fund in a sense that was roads, and a capital improvement fund that was buildings, okay? And it would come out of the general fund. There would be a line item that was set up for transfer into the, and keep them separate so that kind
Sorry, people on the meeting are having a little trouble hearing, so they're
They don't-
interested.
They probably don't want to hear.
That's all right.
Swampy.
Swampy County. So anyway, we just talked on, after you left there, we were just talking about what that would look like. So if you wanted to do buildings, what's interesting about buildings is a lot of those can be done with a lease purchase. Okay, so we could go in and say, here's the road project, we allocate the 7 mills that we originally allocated back in 2000 to pay the debt of the roads, okay? Then we have a separate capital improvement fund that would be like the multi-purpose building, you know, whatever other facilities that you want to put in there. And there would probably be somebody that would come in and say, we'll do a lease purchase on that for those buildings. And that revenue stream would be a line item in the general fund, okay? Now, whether that would, because of the assessed value being at 1 mill would be 76 mills, and the new assessed value, that's 1.6 million almost. I don't know, I haven't had time to research, I don't know if that assessed value, and maybe we can't find it out, if it's gonna hold. See, that really bothers me.
That'd be my question.
That really bothers me that we go in, and here's the downside of this. We go in and we say, we're gonna do 7 mills to a debt structure like this, and whatever that amount is. And let's just say that we do all these other things with it, whether it's a lease purchase or whatever, and we come in at 76 mills based on the new assessed value, okay? So let's just say the new assessed value at 160, when we get down to finalize it for the tax statements, Keystone gets kicked out. Or I asked somebody the other day, she was the CFO, she works for us now, but she was the CFO of the refinery in McPherson for several years. And she gave me a lesson on the other side of how to deal with pipelines. In comparison to the PVD person up there that gave me the tax side, okay? And I'm not gonna go into detail there because I don't want to divulge any kind of, it's nothing wrong, it's just, she was just explaining to me how pipelines work. There is a piece of the value, she said, that is actually the structure. Okay, there's a small piece, it's not a big piece, but there's a small piece of PVD, would say that was structure. So that pipeline is really there, okay? And then there's, I don't remember the other piece, but one piece is the flow, like I told you. The amount of fluid that flows through that pipeline is how that pipeline is valued, okay? So if Keystone has no flow, what could happen is it goes from an $18 million assessed value to, let's just say, 5. Okay? So 5 and 2 would be 7. 7 onto 40, it'd be 147,000 per mil instead of 160. So if we got into that situation, we get down and she certifies it to the treasurer, it's a 147 instead of 160. All of a sudden, because you did a resolution, you're not tied to the revenue neutral rate, all of a sudden that rate goes from 76 to, I don't know the number, but 87 or 84, because you've already locked in the dollars at 76 mils based on a assessed value that we're guessing at in a sense on Keystone. So that's the only thing I would hate to happen if all these factors get locked in, like we say, we're gonna do the debt, we're gonna do that, and then we find out that Keystone's 18 million is only 3 million or 5 million or whatever. I mean, there's a risk there. But those are the things I thought about since we talked, Tina and I talked, and we all talked the other day. I mean, it's workable if we got a good assessed value, and it's amazing, it came within, 10 million came within $2,000. I mean, I was just picking a number. And 10 million might be, with your assessed value, might be close to that now. You know, I mean, your debt limit, because at one point that when you did the jail, I think you did a calculation there, it was almost 5 million, I think, and that was, how long ago was the jail project? Even though it wasn't tied to, it was to sales tax, I think it was around 5 million. So that was about 8 years ago. So, you know, it might be 7.5, 8 million. I don't know what your debt limit is. And then you could do a resolution, and you don't have to worry about the debt limit. So that's another, but that's a protest petition, and typically those are 10% of the registered. I don't know what that statute says, but 10% of the registered voters could come back and protest and put an election.
Couple of questions. Do you have any other clients that have major pipelines?
No, the only where I got this lesson was, like I said, in Reno County.
I
Because
was just trying to find some comparisons on the counties that have major, because
Butler,
it's not unusual.
I mean,
Butler's loaded with.
Butler would be a good one, probably, we could
Yes.
talk to, and I know the administrator down there.
Okay.
I could see how they, you know, because Keystone, I don't know,
Yes,
it would
it
go
goes
through
through
there,
It
yeah.
goes to Butler County.
But
Yeah.
they've got a lot of different companies.
Oh,
so
yeah,
one
with
may be up,
the
other one
refinery
down.
there, yeah.
But is it, how much does it flex? How much do pipeline valuations flex? That would be a question I would have, evaluation.
Well, in those little townships over in Reno, that's where I first noticed it. It was amazing how much it flexed just in 1 year. So I don't know, I might do a little more research on
I'm just
that.
curious.
So is there a possibility that you go in and reevaluate that based on your evaluation every year and float another bond issue every year?
I guess-
Rather than one just big,
Yeah.
one big chunk?
Yeah,
I mean,
Yeah.
rates are gonna have a big part of that, but
Right.
you know where you were every year. And you can say, okay, we can do a $3 million bond issue.
Right.
Fix that.
Break it up.
and what that would potentially do also is you probably would be able to lock the rate in a lot faster. So like if you have a $2 million bond issue or a $3 million, they might be able to, it's whatever they would be able to get done in a certain period of time with the temporary notes. They get it done, and then you lock in your rate. And then you decide the next year, well, do we have enough?
Right.
Does the assessed value hold up? Is the rate structure, did it go from 2.5 to, all of a sudden you're paying 7%? Well, maybe that's not a feasible, because on here, if you look, it really is amazing, even on 2.5%, on the second page there, the amount of interest you pay on 2.5%, on page 14 is 1.2 million. It's almost one full 7 mils that you're paying just in interest, and that's at 2.5%. So if you double that, that's 2.4 million. I mean, once that rate starts climbing, it's somewhat cost prohibitive. Yes?
So another question, and Kent hit on it earlier, is the interest rate. And right now is obviously the prime time to be locking in interest rates. And I'm not familiar with the county and government side of it, but I know in the other industries that I am involved in, we've actually done a lot of advance borrowing, knowing, okay, we're gonna have a project in 21, we know we're gonna have a project 22, 23, 24, so we've already locked in long-term money.
But
We're gonna be paying, it's gonna be sitting there not
paying ahead of
gathering,
time.
but in over a 20-year period.
But I mean, how long can you issue temporary notes?
I think they can stand outside for a while, but the thing you have to remember in the government environment, the temporary note is not your final rate.
Right.
Where
Right,
in,
that's where
where
is
in a
there-
private, when a private setting, I mean, or in
Yes,
your, what you're
yes,
talking
other
about,
worlds.
yeah, you're borrowing, and that rate is probably gonna be borrowed based on your assets.
Yes.
And you're gonna, where in government, unless David's, I mean, he's an expert compared to, I'm just telling you what I think. I think they would, the temporary notes, if you lock, I mean, if you got them and you did the project, the real rate doesn't start until you actually
And
sell the bonds.
there's no way of accelerating that and doing the bonds before.
David may have a way, I don't know, but I don't think so.
I don't know.
Those are great questions, but I don't think
From the
so.
outside.
Yeah, like McPherson is a very active borrower.
Mhm.
You know, they're, I don't know, they probably, at any one time, they've got 25 or 30 different, you know, special projects going on. And they have a capital project fund, and it's all based on temporary, I mean, there's temporary notes running on this project, and then all of a sudden you go into this, when this one goes off, and it becomes a, you know, a geo bond. But I could talk to, actually Butler County's another one they've got, you know, because of Andover and all that. I mean, Will, his name's Will, I think he's still the administrator there. But, you know, they've always got stuff like this going on. So he could give me some insight probably on both the pipeline side, if there's any way that he knows, because they've had to do all kinds of infrastructure, you know, over on the west side of the county.
It's very difficult for a lot of us to wrap our heads around borrowing money in advance and letting the money sit.
Yeah.
But
Yeah.
if you're looking over a 10-year period,
Absolutely.
20-year
But a
period,
30
30-year
temporary
period,
note would be,
Not the way Dan
It's
Clark
in
big
says.
essence,
it's big money.
if I went in, if I was farming actively, I went in and got a line of credit.
That's right. Yeah.
Bank's not gonna give me that line of credit for more than a year,
Yeah.
at least
Yeah.
locked in.
Yeah. Yeah. Yeah, that's a way to look at it, probably as line of credit, because it's just temporary until you get all your expenses paid, and then you lock it in. Yeah.
I'm just trying to think of a way to accelerate locking in the long.
Right.
Yeah.
Okay.
Okay, so interest rate, valuation, what else was, there was something else I was,
Jonah just threw out a figure here for roads, he had it on his sheet.
Okay.
For 4 to 6 inch was 400 and some odd thousand, 425 a mile. That took times 13, comes up 5.5 million. And then you take that times 3, if you did the 3 south roads, just from 56 to 50, Hillsborough, Nighthawk, and Sunflower. So there's 15 million real quick like at that price. And I don't know if that's any base material done or not. That's just, I don't know whether that's just a black
It's like 6 inch.
overlay or, you know, without the base job being done. So, you know, that's the kind of money we're looking at to face. If, I mean, I'm not saying we're gonna put 6 inches of
Right.
asphalt in all 3 roads.
Well, I was looking at about the same. That figure's just 4 inches of asphalt, but it's 6 inches of 83 underneath it. The capital outlay at $14 million once it gets there.
yeah.
That gives you about 33 plus miles, 33.8 miles.
Yeah, and what that is your cash carryover you have right now, or encumbered cash, based on, I didn't look at 21, if you spent anything in capital improvement in 21.
We have $1 million scheduled to come out of there for that.
So you beat that down to 3.8 million, plus if it was 10 million, that'd be 13.8. So you're still under the 15, and you only got how many miles?
33.
Yeah. Because that, you know, when I was thinking about this, that's really what, and that's what Jack and the commission had to decide back then. What roads, you can't do them all, so what roads are the ones that are the key roads that you need to do right? And I think that's key, is you gotta do them right, because you're gonna be back in the circumstance again if you don't do them right. But it's a lot of money. I mean, I remember they wanted to do some more, and it was probably August of 2008. If you remember, there was some things happening there, and diesel went, it's the most I've ever paid in my truck, $5.15 a gallon. And they were going, oh, we want to do some roads. Well, it went literally from 100,000 a mile to 325,000 a mile. So it's all based on oil, and I mean, I don't know where that's going. I mean, that's another price that we don't know here. Let's just say we have temporary notes, and we don't have a long, I mean, we're sitting here 1st July, And the road, to get any roads done from now till, let's just say November 1st, I mean, you have to have a lot of things happen. So really, you're not gonna start till probably next May. And so then we're setting out, I mean, oil do a lot of things in 1 year. The rates could do a lot of things. I'm not trying to scare you, I'm just trying to say, these are just things
They're all the variables.
If you look at 2009,
yeah,
what trend it did,
yeah.
look at what's happening right now, what trend it's doing, you get pretty well, if it keeps on it, you're gonna see what it's gonna do. I mean, it's gonna be
Yeah, I remember
$110 a barrel for a minute.
Yeah, I filled up my old red Dodge at that time, and it was $115 just to fill up mine. Just unbelievable how much difference it is. I don't know if these are the things you wanted to talk about. I mean, these are things that
You gotta think outside the box to get something done.
and I just sat down and I thought, okay, well, if we took that 1.1 million and made that the revenue, the payment stream, you know, and then what debt could we have for that? But then you gotta make sure, that's where the engineer would have to come in, you gotta make sure you don't let everything else go to, and then all of a sudden you have a flood like this weekend, and I don't know how many roads are again destroyed.
Or like a month ago and you just re-rocked.
Yeah. So, I mean, that's why you have to make sure over here you have this other money still sitting here to take care of those types of things. You don't wanna lock it, it's like at home, you don't wanna lock it down so tight that. Anyway, that's just thoughts I had. I don't know where else you want
But
me
it would be an excellent time to do one now,
Yeah.
just because of the rate.
And David, he is so flexible. He's worked with you a bunch before, but
Yes.
he actually said, I could be down there and talk to him, you know, not too long. I mean, he's just I've worked with him now on Marshall County. They're building a jail, and I just use him pretty well full-time, because he is just so easy to work with, and I helped him a bunch on Ford County. He took one Spark County. It was a disaster. Not against David, just, he goes, oh goodness, I didn't know what I was getting into. So, that's okay, that's what friends are for.
That's your side of the story.
But I would agree with Kent on a couple of points. Now's the time to do something. I agree with Jonah, it's time to do something different. It's time to do something bold. Obviously, we have to take in consideration a big chunk of our valuation now is potentially variable, so we don't, when a step over conservative play still comes into consideration. But it looks like to me, we've, as a commission, with our road and bridge person, need to set our priorities, come up with a hard list, and I think that then will help
Realistic.
sell.
A realistic hard
Yeah,
list,
realistic.
not a
Realistic.
$26 million
Yes,
list.
No, a limited, again, in all parts of the county, as Commissioner.
That's why I
Coffey states.
alluded back to the evaluating that thing annually to see if we can do another GM.
Right, but no, we're not gonna we can't. The illustration was good, but we can't do big.
No.
But it is time to do something
Gotta start. I really do.
on a reasonable scale to at least make some.
I think there's always gonna be a risk there of assessed value going up and down. So what you have to live with there, and I don't know that number off the top, but let's just say it went from 18 to 3 million in Keystone. And whatever that rate risk is what mill levy risk is what I'd call it. So you have a mill levy risk, you have it set at 76, based on an assessed value you don't know. Are you willing to let it go to 85, you know, in order to take care of this that's something you would have to, you know, because that Keystone thing, based on the current political environment, I don't see that Keystone thing moving over the next 3 years. So I gotta do a little work to figure out what the value would, you know, is it gonna, it's there.
That's what I'm wondering, how's the value it is now,
Yeah.
through depreciation and everything through the past 10 years,
Yeah.
and it hasn't turned a tap yet.
Yeah.
So does that mean we're actually thinking about it the wrong way? Is if
Yeah.
it turns a tap,
It could
does
be
it
a lot
actually
more.
increase the value? Because
That's
it's still a dead line.
I don't think
No,
so.
no.
No,
There's
there's
product going through
there's
lines.
product going through it.
Yeah, there's
Yeah,
product
it's
going
been
through it. Just have a
functioning for
10-year
years.
government.
Right.
This
That's where
is
no
a-
taxes could be charged to them.
The one that's in the national news
That's
is
Excel.
an
It's
extension it's still the same company and but it's another
It was,
pipeline.
it was
But
just a
there's-
bypass. It's
And there's no
shortening
reason to
the-
think that they would shut this one off.
No, I wouldn't
No.
think so.
I wouldn't think so, but unless they
Yeah.
run out of oil up
I
north.
mean, conceptually, you would think Keystone would be pushing their pipelines that they have flowing max.
Oh, yeah.
Yeah.
But,
No increase if nothing else.
well, it may be maxed now, we don't know.
Yeah. You know, that's something I've never heard, what kind of percent they're flowing at right now. I've never heard that over the last 10 years.
That would be a really good
There's a
question.
big pumping station down right off the turnpike there in Butler
Yeah.
County.
And also,
How far
They
right
have
above
every
Dave?
so
Yeah.
many
How
miles.
far above you is it?
it's within a few miles of me.
I was gonna say.
Right across the county line.
Anybody there?
Oh, yeah.
Why don't you go
That-
talk, go
that-
talk to 'em.
The valuation of that pump station is more than the pipeline in
Well,
Marion
probably,
County.
yeah.
If it would have been located in Marion County, that pump station.
I guess go ask them what capacity you guys have today.
Yeah. Well, just for the year.
Yeah.
Right.
Got
I'd be curious.
A lot of
what-
technical questions. Yeah.
I imagine they guard that information pretty.
Yeah.
But even as a friend, you know.
Yeah.
Take a case of beer, go by and visit somebody Friday afternoon, you know. I probably wouldn't tell the paper, but
Okay, where do you, I didn't want to do a lot of extra work until we kind of figured out, like here, this is just me talking just off the top of my head. These are the dollar amounts. David can definitely refine the debt side of this and tell you exactly, you know, what the debt limit would be. And then if you want to go outside the debt limit, that would be an option based on resolution, but there might be a chance that 10% would come back, put that on the ballot. You know, there's a lot of ifs there. But to me, this has always been the discussion from 2000 to now. What roads do we want to do? What makes the most sense? And what's the engineer and the road bridge say? And these are the roads we want to do, and here's how we're gonna make sure that all the other roads don't go in and become dilapidated. And I can't answer any of those questions. I can tell you the dollar amount, but that's where I think we're kind of at. And so that's why I didn't know, I don't really want to spin my wheels by going in, and I can finish, with Tina's help, we can finish the budget like that, okay? Literally. I mean, because we have it pretty nailed down. The 26 million, just change it, you know, with one number. But then the second piece that I could mess with a little bit is the building piece, and I don't know how much, we've got about half an hour. That's something I'd really like to know a little. Okay, I'd like to know, are you done with are you done with the road discussion?
I think we're gonna beat that as hard as we can.
Okay, so then there's literally two more things that I would like to know, and then Tina and I can. One of them is, where do you want the mill levy? Okay, do you want the mill levy at 76, where it was last year? I think I presented 74, I just picked a number, you know, just to show you the difference between the revenue neutral rate and where that's, so that's 74, that's 1.2 million roughly. So if I know where you want the mill levy, then I can do a lot with Tina's help. We can figure out if this is gonna work or not gonna work. Because I need to know that kind of before we start on the building talk. Because on the building talk, what's gonna happen is it's gonna take dollars that are not associated with buildings. Because most of those lines have been, in a sense, zeroed out, okay? So,
We have a 500,000 put in this week.
They got a phone call shortly after. saying,
yeah,
"That's
he
what I was
texted.
thinking."
Shortly after that.
Well,
What?
oh yeah, I better not say it, but anyway, it went down. I don't know what he wants now.
Well, I think, I mean,
It was a budget.
it was a great,
It was a learning moment.
Yeah, it was a great point, and that's how you learn is 500,000 is 160, 160 times 3 is 3 mills.
Yeah.
And that's why I was trying to explain to the Osage County Commission, there's 2 new ones, I don't mean this bad, but they're just a learning curve.
Yeah.
And they go, how do you know that's in that fund? I said, well, that's just the way our budget's done. And how do you know it's in this fund? Well, that's just the way it's done. And then when I said, I sat through the department heads up there because they wanted to hear and they know I know a lot about it. So the sheriff comes in and says, we're gonna build a $18 million jail. Oh, okay. Well, we're gonna fund it with 144 beds because we've got contracts that we're gonna develop with the US Marshal and with the FBI. I don't remember, there was,
Worked for a little while, then.
Yeah, yeah.
And they opened everything up.
so then he was just talking about, well, if I had this $30,000 trailer, and I just let him talk, you know, and then at the very end of the day, I go, okay, here's what I need to know before we meet the next time, is you have a list about this long of things that each department wants, and it's just a learning experience, and we're gonna go in and we're gonna put in those numbers just to show them.
Yeah.
It's gonna be 10 mills over where they wanna be. And they're at, their revenue neutral rate is 58. The way we calculate, just based on the rollover of just the same numbers, was 61.8. So already they're starting with 2 mills before they even crack a number on there. And I tried to explain that to them. They go, holy smoke. I said, what's 2 mills? I said 320,000. Where do you find 320,000 in your budget to cut? And you're wanting to add all this over here. So, I mean, I'm not picking on, I'm just saying it's amazing when you wish list. That's why I was sitting last night, I was thinking, because the capital improvement fund has always been one of those that if, and I don't mean this bad, but if certain commissioners would get in, the dream that was set in 2000, and how it's supposed to be, in a sense, used the way Jack wanted to use it, could just evaporate like that, because what they could do is 4.8 million, or whatever that number is, you divide it by the number of mills, and we could just, one time, take it back to general fund, or 2 years in a row, take it back to general fund. But what the problem with that is, the mill levy goes down like this, and then what happens after 2
It
years?
just spikes.
Yeah. And so I just tell people, you know, over the years, you just gotta keep that, kind of like, that's why the CPI was kind of nice with the tax lid, that piece of it was, is because you're keeping up with spending. If inflation kicks in, that spending is just gonna go whoosh, like this, just to keep up with what you have right now. So that's the thing I need to know is, where do you want the mill levy? Once I know that, then I can go back into the line items with Tina's help and say, okay, we have, okay, let me just think this off the top of my head, but like park. If we're gonna have to pick up some extra money there for the dock out of the general fund, and her and I were talking about this, let me see, where did I put that number? If you look, I think right now, the dock replacement,
We put it in the general fund.
yeah, it was 101,000, there's a check sitting here, and 85,000 of insurance, okay? That would help fund it, but the dock was gonna be 400,000, wasn't that what we said?
300 and something.
365 or something like that. So all of a sudden,
Conservative estimate.
yeah, so all we're saying there, in a sense, there's another 120,000. If it's 400,000, there's another 120,000 that's in a levy fund that we have to fund with mill levy. And I started last night and I decided to go to bed, but I was gonna list out all the, like those line items that have the buildings. And we could do that really easy, 500,000 on one, road and bridge was another 500 or 750,000. 750, I think it was originally, now it's 0. But we were just looking at deals, and I would guess it's probably, if I add all those line items in, now that the transfer station's done, I'm guessing it would probably, let's just say conservatively, $2 million. If you throw all the needs in for buildings. Well then, most lease purchases are done on a minimum of 5 years, maybe 10 years, if you want to stretch out one that far. So you have to find a revenue stream to service debt for $2 million if you want to do those. Now you could do them in pieces. You know, you could go in and say, okay, the multi-purpose building is 500,000 and the revenue stream is this. Here's how much we're saving, like we talked the other day on the different payments of the rent payments. Okay, so we can pick up $2,000, you know, a month. That would help fund that. And I mean, so that's kind of what I need to know is there's really 3 things. You meet with the engineer and you figure out your road plan, okay? Because that's huge. Those are huge dollars. So you have the road plan with the engineer. You as a commission tell me what mill levy you're wanting to shoot for. So 70, 74, whatever that number is, okay? And it can change, I'm just saying I need to have a, kind of a starting point to see if there's enough revenue to fund all these different line items we're talking about, okay? Then, on the buildings, part of that, I think, this is the capital improvement fund there, if we set up a separate one, if you would look, and just look back to this road and bridge one, even though it's road and bridge, what I would envision here is on page 15 there, that up at the top, what we would do is we would come up with a transfer amount out of the general fund, because that's really the only fund you can transfer out of. And then
on
down
page 15 of this
on page
packet
15
he
of
gave
what
us
I
to
gave you
take.
today, yeah.
Thanks too much.
No, the one he.
No, I just
on
gave
the
you right there on
table.
the table, right there, yeah.
That one.
Yeah, if you go to the
Page
last
15.
page, yeah. I think it's the last page, yeah. I just made a bunch of notes. So what we do over here on the left-hand side for the capital improvements, everything else, I think the way Tina and I talked about it, would be easy to help manage is you have a road one and you manage it over a 5 to 7 year period, you know, and you just keep managing that road piece. And that's a revenue stream to fund that. And then you have the all other capital improvements. And you could even throw some equipment into that too if you want. Instead of having equipment reserve, you just say these are the other, and you list those down the side there. And then you put them, this is the way I would do it if I was just sitting down with you, is you would just put, okay, we want the $500,000 one done in 2022. Okay, we drop it in there. And we have to figure out how we're gonna fund that. Well, it's a lease purchase proceeds, okay, and we fund it. And then we see if the revenue stream will cover the payments on that, okay? Then for 23, we say health department, you know, whatever, I guess multi-purpose building is gonna be the health department. Would that be?
Could be.
Could be,
Could be,
okay.
yeah.
But those are the things I need to know, and those are commission decisions, not Scott Lloyd decisions. So those are the three things, the road engineer, where the mill levy wants to be, and then what does if you took this blank sheet right here, what would that capital improvement plan look like for all the buildings and other items? You have tuck and point the courthouse. You know, things like that are gonna be larger than just, you know, line item, capital outlay line items that are just, we're up. If we had those three answers, then Tina and I we could finish it in an afternoon, couldn't we?
I think, does the commission wanna, we might as well jump right into it, is, do they wanna, I think I heard Jonas say the other day that he really would like to see maybe a little decrease in mill levy, and yet,
Just, yeah, I mean, it's part of it. That's why I say, you know, I've had a pretty good experience with an administrator throughout the year. He'd be chuckling in his sleep, I know he was, because he'd write down everybody's wish list.
Yeah.
Everybody's wish list. Come time to budget time, he'd put it all in there. And it was the first year, a new mayor, first year, new councilman. And he goes, well, this is what we're gonna have to do it. Somebody's gonna have to have the bloodletting. And I mean, people come unglued. And they were just, what are you guys trying to do? And you had new people in there and they're like, well, we didn't understand. And it was a very good learning experience.
Yeah, absolutely.
And then all of a sudden it was just the red pin come out. It was writing that out, writing in a realistic number, writing that out, writing in a realistic number, or just canceling things out altogether.
Yeah.
And it really made you realize what was a want and what was a need.
and then the second thing with that, if we do lower it, and we're going off of the income, the value that's coming, what happens 2 years from now? Can we, like what you said, it goes down and then all of a sudden it's shoot up? If the value drops from them.
Right. And we can raise the mill levy back up next year
So
because the
You
tax
could.
lid.
You could.
Because the tax lid is no more.
Dave?
Why do you want to lower the mill levy?
Well, I'm just,
I mean, it looks
that's,
good in press, but.
this is
Well,
just discussion.
So, do we need the money for lots of infrastructure?
Well, you wanna make sure that you're not burdening your taxpayers too much, especially when you have extra money coming in
But
from
they-
outside
But
sources.
they all want more stuff.
Yes, everybody
I
does.
think
Yeah.
I think the expectation from what I've talked to people is they're gonna expect at least a slight decrease in the building.
Yeah, because the pipeline come on, so
You
they will
know,
expect the
but
pipeline
they
to
don't,
pay
you
for
know,
some.
we've been hearing things that they're probably never gonna know. They'll
Correct,
explain to
correct,
them.
yes.
It may be here this year and not there next year.
And that'll
Yes.
be the proof in the pudding on the wind farm next, in 10 years. You know, hopefully when they come on, the citizens see a tax break.
8 years.
Huh?
We're at 2 years.
Yeah.
If we stayed at the
Sorry,
same
pretty
tax
close.
mill levy,
Pretty close.
what would the actual mill drop down to then with this new increase?
Which, say that one more time?
If you
If we
stay
stayed at the same mill levy,
revenue neutral,
yeah, and then what would
64.
the actual levy of the mill be then?
64 something. You brought it the other day. And we were at 76.
So,
The worth.
About 70.
It won't change though, will it? It won't change the value of the mill.
okay, so
No.
your revenue neutral rate is 66.412.
There we go, 66.4.
66.412.
And our
So-
current mill levy is
76.
76.
048.
So 66, 76.
So it's about 10 mils.
Yeah.
And once you do a resolution above the revenue neutral rate, it can be anywhere. So what we have to decide by July 20th is if you want a resolution or not. That's the first step. And you would want a resolution because that gives you flexibility that if we find out more after we do some more work here, you would be able to set that by, what did we decide? Oh, different person.
Just for a little bit.
Okay. So we would, I think she wanted to try to get the budget hearing and the revenue neutral rate hearing on the 16th, I believe it is, instead of the 23rd.
We gotta go forward with the resolution.
Yeah, so you gotta do the resolutions, that happens. So then, the next step was, okay, where do we wanna put that between 66, and probably no higher, I would assume no higher than 76. And then there's some questions I'm gonna try to find out, maybe this week, I can find out from Will down at Butler County, some things about the pipeline. But these things are all other things are all things you all need to really probably talk to engineer, you know, have a heart-to-heart on where we want the mill levy, and then what projects, if any, that we want to put in on the building and improvements. Because all the other things, I mean, I looked back through just, you know, I've made all kinds of notes here. I'm probably, Tina and I were talking about, like, on that handout I gave you back the other time, we had like, sales tax at 650 in the 21 and 22 column, and it was 776, and you know, she was showing it's already above last year where we're at.
Yeah.
So maybe we just want to go to 776 there and know that, so there's about 250,000, which would be a mill and, you know, 3/4 or mill and a half. And so there will be a little bit of money there that'll help, but those are typically, in my experience, those increases cover the other common increases you have in the budget. I never really want to count on those because they usually help you with unforeseen expenses.
So, just a ballpark, where just all the wish lists that come through the other day, not necessarily ours, just the departments. What revenue amount are we above revenue neutral?
Or do you have
Because
a
there's very few went
theoretical
down,
mill levy?
most went up.
You know, we put in all of them, including the 26th,
No,
and
that
I
was-
don't know if I know that number off the top of my head, but that 74 that I put in, let me look here. You know, I gave you the 66, which is the revenue neutral rate.
Right.
And then I put it at 74. And I wrote, if you would, this is where you can go back and kind of look at this and get a feel for it, because this is what I would have to do. If you remember, on each of those levy funds I gave you the packet on, okay, I wrote by the amount that showed up, which was the 74.226 mill levy. And all those funds were funded with that, okay? If you look, just like the general fund's a good example. The revenue neutral rate on the general fund based on what was levied last year was $3,473,000. The rate based on the 74.226 the amount of dollars was 3,986.
Right.
So right there alone is 500,000 difference between the 66 revenue neutral mill levy and the 74, just in the general fund. So, and that funds with the cash carryover. If you look, I don't know if you have that handout I gave you the other day. This is probably the best way to explain it here. I'll show you the kind of the parameters we have to deal with here. But if you look on page 18, that's where the general fund's tax levy is.
Somewhere in here, I know. I put it in my drawer like a
Nine.
That's what he needs.
So page 18. I looked over, and I thought you were sitting there, and I asked you, whoops, wrong person.
Yeah, I snuck out.
Where's Sneaky?
And she snuck back in.
Yeah, she did.
I think that's it.
Page 18.
Yeah.
I'll let Joan and I look at it here.
All right. See if anything here.
This is it. You know, your papers, if you look back through the years, your papers all look alike, Scott. Different numbers on them, but they all look alike.
I started to tell you something a while ago, but on the way over here, I've been educating these two over here, you know, with stories.
Stories.
Yeah. But, you know, last night I was really, you know, we're accountants and they really tracked with me. They thought that's pretty good. I was really into the Excel and trying to figure this out for you guys, just trying to figure out outside the box. And I was so wide awake at 1:30 that I could hardly, you know, go so. And you agree with me, didn't you? Once you get in an Excel spreadsheet and you're cranking, now accountants are the only ones that ever would think that way. So you guys are probably going, goodness gracious, what's wrong with those people?
Not necessarily. You get deep into
You
some
kinda get into
QuickBooks,
some, you
get
know,
into some
and
QuickBooks
I'm
stuff, and
thinking,
if
oh,
something
I-
doesn't jive, and you
I
gotta
work
get
with
that
them all the
error
time,
code
I
out.
just can't figure out the formula.
And you go back and try
Okay.
to mess with the tax years prior,
Yeah,
and just
exactly.
like trying to narrow it.
Yeah. So let me just show you something on 18 that Tina's, we talked for probably about 2 or 3 hours that one, after we left the other day, you stayed here and we talked, trying to figure out some things, and I'm just gonna show you something that happened here. So on page 18, you have the revenue neutral rate of 3,473,000. You see that number? Okay, the number of 3,986,000 is the general fund at the same mill levy as the year before, based on the new assessed value, okay? Now go up the line, I have them circled on yours, I believe, there's 3 circles there. If you look at the first column on the bottom of 2020, you see a cash of 2.7 million. You go to the middle, you got a cash of 1,963,000. And then you go up a little bit to the right of that and you have cash carryover of 1,664. So what we dropped into the general fund, what that's really saying is the expenditures in the middle column and the 2022 column are more than the revenue coming into that fund.
Right.
Because it went from 2,700,000 to 1,900,000 to 1,600,000, okay? That's without what Tina and the lady we were talking about the other day is if you go right up above that 1,664,000, there's a 0 for multi-purpose building. You see that? I said, well, that probably should be 500,000. So we just, out the side, wrote 500,000.
We're down to one month's carryover.
Yep.
And then you go down and we took ambulance operations and marked it out and put dock at the lake. You see that line right below there? 120,000. There's almost another 3/4 of a mil. And that, we've only dealt with 2 lines, and we're sitting at 74.226 mils to fund this budget with a cash, unencumbered cash going like this. You see what I'm saying? That will happen. General fund is it happens more dramatically in the general fund, because typically the line items there, you pay a bigger line, you know, like the building or whatever you want to do. Now, you could go in and not building and you could say, okay, it's 500,000, and you could either shorten the line item there or put it into its own capital improvement plan, where you would say, okay, let's do that on a 7-year, you know, payout, and 7 years into that, and whatever the interest would be right now. You could probably right now build a building pretty, well, no, you couldn't, because of all the lumber and everything.
Building costs are
Yeah.
crazy.
The rate would be great, but yeah. Anyway, that's the things that I can't really answer until I know what the mill, that's why I need to know the mill levy. You see what I'm saying? because that mill levy, if it goes back, if you're gonna say, let's just say you set it at 70, you take it up 4 mills from the revenue neutral rate. Well, I'm losing 4 mills, okay? Because 4 mills is 160 times 4 would be 4, 5, what are those?
There's some items in there too in the 2021 that really are not gonna hit those
Yeah.
estimates, so those will actually bump that cash carryover over.
Absolutely. And what did,
Like you, the administrator, we already talked to yesterday about cutting that in half, so there's another 70,000 over there.
yeah, and I marked it, it hadn't carried through yet. But back when Dan was on, he was actually float tripping in Minnesota, or no, in Montana, and he said something about the middle column. Well, the middle column does have a lot of flexibility. I mean, if you go in and say, well, we're not gonna do that anymore, or this amount's gonna be that, we haven't got that. What happens here is we get it kind of where we feel like you want it, and then Tina, bless her heart, she goes through every one of those line items and says if it's gonna happen in 21 or not, because I don't know that, okay? And she does a really good job of that, of saying, this is what's gonna happen, this is not, or this is where we're at, or we're gonna carry it over the 2022 column. So that middle column could go from 1.9 to, I mean, it could go up in there 500,000. But then the 500,000 goes back down in 2022 because you're gonna do building. So I just need, those are the 3 things I really, really need.
So, Dave Crowfoot says, let's leave it, he wants to build some things, do some things that we're gonna need. Wait, I'm hearing from Dave Crowfoot, maybe you're looking at 76 still, or 77, what do you?
Yeah.
So, we've got a little difference of opinions here on exactly how we're gonna go about this mill levy, so.
And just as a clarification, at the end of, by the time we had our evaluation in November and set the budget and I set the levy, we were at 76.048 was the levy rate for the county. If we go on actuals, not on the estimates from July. So just letting you know that.
I think, isn't that what the number is?
Yeah.
The middle column there?
That's what we gave us one.
We have,
Yeah. I think
76,048.
Yes.
So like on page 42, if you looked, the 2 first columns that have circles on page 42, in the 2020 budget, it was 74.226, and that would have been the actual rate that she would end up setting, okay? And then the middle column would be the actual rate of 76,048, okay? And then that italicized number over on the right-hand side is a 66.412, that's the revenue neutral rate. And then the 242 is if you put 26 million in on the roads. Yeah. So,
I think we know that we want to do something with roads, and so I don't mind cutting that number down to something realistic.
2.6.
2.6, 3,
Well,
somewhere in there.
I mean, we're at 1.3 now or something, I don't.
Now, just keep in mind too, your capital improvement fund is where you have been funding your major blacktop projects. And your, that line item in the road and bridge fund and blacktop has almost never been used. That, because you don't have enough manpower and you have to also have cash carryover too, so. Not saying don't put something there, but that's not a line that we have really used much.
Because we don't have a project to do. I mean,
There's always projects.
yeah,
Well,
well,
but
It just, it comes out of capital outlay. It's
Capital,
not
yeah,
out
that
of
capital improvement.
the road and bridge line item.
I'm not saying you can't fund a project out of that particular line item where he put the 26 million.
right.
But in the past, when we've even put 900,000 on there, we haven't really been spending out of that line
Right,
item.
it's cash carried over here.
Because we've been spending it on gravel or other items where we're always
Yeah.
underfunded there.
Is there-
And
is there a number somewhere that you would have for what the FEMA reimbursement would be if everything got turned back to you?
It's 900,000.
I thought it was close to $1 million.
Yeah.
I mean, over
It
the
was
last 2 years.
900,000, so it's a.
But it's 2 or 3 years old.
Yeah, the 2019.
2019.
How can you count on that?
Well, they'll probably pay it, it's just, they're
Yeah.
dragging their feet.
Well,
Yeah.
well, the last thing we got told
2 years
was
or 5
really
years?
I
confusing,
don't know.
was they weren't gonna pay for anything level 2 and above or something.
Yeah.
Which would make no sense, because then we'd be paying to fix dirt roads, not gravel roads.
Anyway, that's why we always, back to that cash carry, I just wanted to show you that because you always need to make sure you keep that healthy because of these things, just like this weekend. You know, all of a sudden the roads down in the south part of the county are struggling, and FEMA doesn't reimburse them for 3 years, and you're having to come up with cash. And if you max your debt out, that's one thing. You max your debt out, you're not gonna have a lot of flexibility to do other things. Yes?
I guess to get back to your question and to help me out before we can,
All right, again.
before we can tackle the bigger issues, I wanna know where we're at, mill levy wise, from the outside.
Yeah.
So I guess I'm with Jonah, I would like to see some decrease, and maybe that, maybe we can start getting out the red pens and start moving forward on what's realistic and what's not. I guess in my mind, I would hope for 72, realistically, probably 73, 74. I don't know what, we've got to give something of that back. I mean, really,
Can we calculate the impact on
Randy's laughing, and I know that.
a $100,000 property set at 72, 73?
Yeah.
That's where, in my
I
mind.
mean, I have to have something to relate to.
And then we can start working with that number. So Randy, you're laughing because it's,
Well,
we've already probably up, we're probably already at 86.
Maybe we shouldn't use 100,000 anymore, that's the one we've been using, maybe we need to go up to 150. I mean, realistic, that's what it takes to just go buy a house.
Yeah, I knew that was a 250 a cheap.
Well, more now.
Yeah,
It's a cheap.
I know all the items that were discussed, the building, the multi-purpose building, all that, they need to be left in there, in my opinion. Whether we put in 25,000, which is unrealistic, it's never gonna get there, but it is a cash carryover that will eventually.
At least a number.
It will,
Right?
yeah,
At least
put $5 in, I don't care.
A line item.
But it needs the cash carryover on all those projects that you wanna get done. So,
But your question, your statement, and then him coming in, he said he made a text message after the meeting last week to Scott or something, I don't know exactly to who. But it's interesting that I've sat here quite a few times and see somebody come charging in, and you heard it, the big statement, I said, I'm not gonna stop you at 500,000. And then all of a sudden, they shrink up a little bit and say, oh, wait a minute here,
Well,
maybe.
it's
maybe-
exactly because of the
This way.
loan, because what the impact is, because a building, as we talked about, would be lease purchase. Why put 500,000 into it and then blow the budget on it when you can, 100,000 can accomplish the same thing?
police purchasing.
Yeah, and something we need to do is we've had, Road and Bridge had 350,000 in it for once for a building, and then we had multi-purpose somewhere up there, just by doing the $5, 25,000, whatever you wanna make that number, put in that line, but we get up there and then somebody wants to steal that. And so, and we do, and that's not a bad deal, cause we have the money.
Somebody stole something from somebody else in this room.
Yeah.
It
happens.
I heard a giggle.
It
I heard a
happens.
giggle.
So, but I mean, once you set that line item, don't take it away unless there's really something needed. And if there is something needed, I guess it's all right. But you gotta have a goal to get to, and you gotta have a time frame to get there, or are you gonna sit there and have that line item forever?
But, it's like Dave's saying, on a building, we can do a lease purchase.
Right.
Why would we even wanna wait at this point? Because of the rates. I mean, we have to just assume a year from now, rates are gonna be higher. I think you have to make that
That's what I've
assumption.
been saying for the last year.
No, it's,
I'm rubbing off on it.
interest rates, like I said, have been politicized by the Fed.
Right. They have.
They can quote me on that.
Yeah.
Then when you say that, Kent, are you looking at a 3-5-year, 3-year, 5-year, 7-year, 9-year? What kind of term are you looking at?
Well, you look at a building, I mean, the average lifespan on it is gonna be 25, 30 years. I mean, what would be wrong with going with a 7-year, even 10-year? Maybe banks don't wanna go that far, but I think some of them have indicated they will.
That's a standard commercial loan. I
That's,
ain't gonna
that's
care
above
about
our
it.
debt limit when we do, or figured against our
You
debt
would know
limit.
better than me, but I
Right.
think that's a standard commercial loan.
Oh, sorry, I was doing something else.
Outside of.
A lease purchase is figured against our debt limit?
No.
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 Okay. Okay.
It's a standard commercial loan that the tax benefit from a lease purchase to the bank, if they give us a 2% rate, their tax equivalent yield is over 3, maybe 3.5.
So it's a good thing for the bank.
Yeah.
Okay, I think I got an answer for you. I'm not sure, I did this pretty quick, but on the budget thing, the state, they have a calculation and you can change the value of the home. So I put a $150,000 house, okay? Which I don't know if that's closer. So we have, first step you do is you figure out what 1 mil is. We know that is 160,000, okay? And then you put in the increased property taxes based on that 74.226 was 1,253,101. That was on page 9, if you remember that, okay? Drop that in, and so that is an increase in the mill rate. Right. Just because of that is 7.8, because I have to think about this a little bit. Then I drop in a $150,000 house. That is at 11.5%, you know, on the house. That is 17,250 times that increase in mill rate. It says $135. And the reason I wanted to calculate that, I wanted to see what the assessed value increase of 20 million, if it was actually true on that house, because that's what we're picking up with 74.226. Does that sound right? $134.
For Texas?
No, see, I'm talking about,
The
I'm not,
increase.
I'm just talking about that 1.2 million you're picking up because it's really a little bit more than that because your mill levy last year was 76. See, I was just trying to figure out, see, that's why the legislature put the revenue neutral rate in place. Just because the rate didn't go up, but the assessed value went up so much, they wanted to calculate, they want to know what those taxpayers have to pay. Now, most of that 7.8 mills is paid by Keystone. You see what I'm saying? And it'd be a little bit more than that because, let me try something here. 'Cause I
So
think
it would depend on if that individual home's value went
Right.
up.
Yeah, no, I was just using it as an
It would remain the
example.
same though. If it remained the same, the Keystone kicked in, paid this,
Yeah,
and you keep the mill levy the same, you should pay the same.
okay, so that makes sense now. So I changed it to 1.6, so that's about 9.978, and we said it was a 10 mil increase, you know, with the same, 66 was revenue neutral, 76 is where you were last year. So if you drop a $150,000 house in there, this is not what their increase is, but this is what the 172 would be the same impact on a $150,000 house, but Keystone is picking up 18, almost 85 or almost 90% of that 172. That's what I was trying to get to. You see what I'm saying? I did that really quick, but I think that makes sense.
Basically, anything less than 76 should give a homeowner a break.
Yeah.
Depending on what all the other districts that they
Yeah.
are.
That's what Osage County asked me, the commissioner said, well, we're gonna drop, if we drop this 2 mills, then can't we make all the other districts lock theirs in at the same thing? Didn't they ask that? Huh? We had a little talk about that, didn't we? You can't control I said, no, you can't control the other cities or,
It's all between, what is it, county, school, those are your biggest ones, tax valuation.
well, it's about noon, I think the whistle's going. So those 3 things,
Did I hear a motion to?
okay, I heard your mill,
It's
I
a
heard,
work study.
I heard your mill,
Yeah.
I heard
So
you want the
consensus
same.
and
I'm just trying to
Get the
figure out.
temperature.
Yeah,
We're
get the
getting
temperature.
72,
Okay,
74.
I'm gonna go
74.
I'll go 72.
Just to see what it looks like.
That's
Okay.
kind of where I was at.
What, 72?
Yeah. Where were we the year before?
70.
You want
Come on,
76,
Dave,
Dave? Stick your ground.
Trying to make
On that,
Yeah, we
70
shot for 74, but it wound up 76, right?
No, in 2020, back to that page 42,
It's like the-
those are the
Yeah.
actual rates that I dropped in from, or we dropped in from Tina.
Okay,
So the first circle is 74.226, you see that number? The next, last year was 76,048, or 21's budget, which is this year's really. And then we're setting with revenue neutral rate of 66.412.
And then, what else?
Someday,
Year
yeah.
prior.
Year prior to, you mean year prior to 20?
19.
Yeah.
19? I don't know if I have that. You have 19?
Yeah, I mean, if you're gonna look for 19, you might as well look for 19.
Sure,
Kind of show the
yeah,
trend.
sure.
Are we raising the mill just to keep up with the inflated costs? Or are we raising, you know?
2019, 74.237, 2018, 75.627.
75 to 74 to 74 to 76.
So we went back 2 more years, so 18's budget was 75.627, 19's was 74.237, 2020's, which is on your sheet on page 42, is 74.226, and then last year was 76,048, and one of the reasons there is because the assessed value actually went down, so that's why it probably went up a little bit there. And then now we're sitting at, revenue neutral of 66. So I've got Jonah.
More realistic, be 74.
I've got Jonah, Kent, David.
That's true, because that's.
Dave.
Oh, Dave.
keeping
I'm
on
sorry,
the
Dave.
mill.
David.
That's not included.
Yeah, that's why he's
That's right.
David.
This
David,
is
David,
the cost
okay,
that we
Dave.
are
Was 70,
experiencing right now, which
that's last year,
is
just last year's
significant.
rate.
Yes.
Okay,
74.
benefits.
okay.
72, 74, is that what you said?
Just don't say it.
74.
And what did you say?
75.
Huh? 75?
75.
75.
There you go. See,
So you got average.
Okay.
I want to spend
That
that
average bring us a little 74.
Yes.
That makes sense. Yeah.
73.
Because
Probably
I can
73
rethink it, I
half.
think 74 is a better idea.
So now you can just make the magic happen, right?
That's what they always say.
Yeah.
If I could an hour,
He's
Oh,
a-
I don't know if, I'm just presenting to you these 3 things. If I didn't really have an answer here, I don't.
Yeah, I put that
She just put
additional
that in there
session on
in
there in
case we
case
needed
it's
extra
needed.
time.
We don't have to use that. We can do a regular business then.
'Cause I would rather, instead of waste your time, I'm never wasting my time, but wasting your time. I know the rate roughly, you're in a window between 72 and 76, so that's real close, 4 mils.
So yeah, average is 74, right?
Yeah.
There you go.
And then, to know what you're wanting to do with the road and bridge, that's something I really would like to know before I spend a lot of time, because if I know that number, then what happens is, then you go back and you do the middle column, and you do the other lines, because if you decide to go at $10 million and fund the entire, that just really plays a lot on how all the other lines.
I don't think there's any appetite.
we can't do that.
Yeah, so I
A
would
couple
need,
$1 million.
yeah, so I would need to know that.
I'm not, unless I'm speaking out of turn or anything. I kind of, are you leaning toward the 10 million one-time shot?
And I don't even know,
I
we'd
think
have to do
realistically, with what's already in the fund, if we
That
could
would
do
be a
something in the 3
resolution.
million.
You'd have to already be ready to pull the trigger on a few
Absolutely.
projects.
Yeah, absolutely.
I mean, there's just a timeline that stretches out forever there. Or you'd have to get some contractor that was really silly and would want to commit to that right now.
Well, so what I would probably do, my next step here, I was gonna
Probably
find out the
hire that guy.
valuation and stuff, but I would actually probably call David next and email him and see if he could do your bond and debt limit, on your county, and just see what that number is. Cause say it's only 7 million instead of the 10, I just picked 10 because I was wanting to see the board. But say it's 7 million, and that way you don't actually go outside. You can do that up to the 3%. You wouldn't have to go outside. I think that's what is that what it said?
Yes.
Yeah, you wouldn't have to go outside. You wouldn't have to do so whatever that number is below 7 million, if that's the number, then you would come up with that number, and that's what you would use. Then we can back, what I'm saying is, if I know that number, I can back into all these other numbers. And then I can tell you if the lease purchase is gonna work. Because if I have to use up to any part of that 7 mils for the debt service, then I have to back off and figure out, and the engineer's one's gonna tell you this, what should we set aside for all these other upkeeps of the road so that we don't get ourselves in a bind? That would be the next step. And then, if we know it's 74 is the mill levy, that's pretty easy. I mean, I can just go ahead and change the number there. And then we have to see what your wish list is, or what you wanna do with the 500,000 on the multi-purpose or whatever. Or this year, maybe you're just wanting to say, we put in 100,000 on one line, 100,000 on the other, and call it good. I mean, I don't know if I can add much to you this afternoon at 1:15 if I don't know, you see what I'm saying? Those answers. And I'm not trying to get out of staying around here, I love to come to Marion,
So when are you back next?
whenever you want. Next week, I'm going to Osage on the 8th, and our son is moving back to Keachai, Wichita area. And so I may have a day I have to do the U-Haul truck, which I'm not looking forward to. On the 3rd.
That's why you have acquaintances and not friends.
Well, it's a
It's
third
friends you
floor
have to help
apartment,
with.
because it's the only apartment left in the complex.
But you're
So-
moving to,
Huh?
you're moving to a 3rd floor apartment?
My son is. I said, when'd you get that? He said, that's the only one left.
He's
I
got
said,
friends.
Yeah, I told that. I said, round up your friends, because that couch going up to the 3rd floor is not gonna be easy.
You know, those,
Not in that little box is not gonna be easy.
hire the sheetrock truck
Yeah.
and then hire a carpenter to take the window out.
Yeah. Just stick it right in there.
Just don't try to.
So, back to your question,
2 minutes
I
truck.
might be gone, like the 5th is Monday, I think we're closed. The 6th and 7th, I'm not sure those dates, what I have to do with him. The 8th, I'm in Osage, and the 9th, I'm in Topeka. So what I was thinking is, this would give you the rest of this week and next week to get all this worked out with their engineer, try to figure out those plans, kind of get some numbers, and then I would come back potentially on the 12th, 13th, that week. And then, because literally, once I know what you want to do, where we're at, I mean, we've got everything in there. It's just a matter of just changing this, change that, and we could have it, in a couple hours. If I knew all these answers, I could have the budget to the point where you could review it again. Does that make sense?
Is it tight? It's always tight, but is it a tight timeline? I mean,
No, because all you
Well,
have,
we have to have, I have to know what our rate is gonna be on or before the 20th of July, so that's a doable timeframe.
okay.
So 12th.
If
Now-
we did the 12th,
if you do the resolution, you have to know the rate on the 20th.
Yep.
All we gotta do is get through next week.
because we have to include that in the publication.
Well, we know we have to do a resolution.
Well, we have to do a resolution, I was just
We're
thinking.
talking.
So I guess what I'm,
76 and neutral is 70, or 66.
okay, here's my thoughts on this, and maybe, since it's being published, I guess it's being published, I wasn't really worried about that too much, I would just
We
say,
have to have it in there.
no, what I mean is, we just set the, and maybe you guys don't wanna do this, we just set the mill levy at 76 or 74, whatever that number is, I mean, higher, and then it gives you flexibility, because that's all we have to have by July 20th, is that rate, that's something you can live with. That doesn't mean that's the rate that you're gonna use, but to me, you give yourself as much flexibility as you want to that top end. And then when you have the revenue neutral rate hearing and the budget hearing, see, the way that the budget law works is you can always go down, you can't go back up. So to me, you pick your top end, and you have that flexibility between 66 and if it's 76, but you are publishing it, so 76 some people may think that's what you're going to, but to me, that's the flexibility you want, and then you just set your,
But on the publication, the ones that I've seen, it is by fund.
really, I haven't, okay, I'll
Well,
look
because
at it.
the publication that we're doing, I believe is it's the summary page, the budget summary page, Scott, with an extra line in there that says the R&R hearing will be held immediately prior to the budget hearing, so.
I don't know the answer off the top of my head, but I was just thinking, why wouldn't the state do it the same way as they do the budget publication, you know?
It is the budget publication.
Yeah, I understand that, but you have from August 20th to September 20th. That's why, that's way more than 10 days. I haven't looked at all that yet.
I don't understand what you're saying.
Okay,
I'm just
so-
saying in our publication,
So you gotta
I think
send
it would be, what I have seen that the entities are publishing is going to be like our budget summary page. So it would have I mean, we're just held to the overall rate, but I think that it's being broken out by fund.
Okay, I'll look at that and see, yeah.
In this R&R rate deal, is it the same, what you were just saying, is it the same as budget? So we have two people come in and say, rake us over the coals.
Yeah.
Is there any requirement what the commission must do when somebody does have? We can accept, we can accept comments, we can.
Absolutely.
We still. I mean,
Yeah, they can
there's
come to
no-
the budget hearing, just like the budget hearing. They can come to it,
Okay.
they can complain all they want.
Yeah.
But you are the ones that have the last say.
Right. I think we say their viewpoints.
Yeah. That's why, yeah. And typically, I mean, I've been to probably 400 or 500 of those. Only 2 or 3 of people ever really showed up and said anything. I mean, typically they don't show up. I'm sorry, I don't know that answer. I should have known that answer. I was looking at it as the gross, because that's what shows up on the publication. The publication on the budget hearing shows that 66.412 down at the bottom of the budget hearing. I hadn't seen where you have to go back and you have to do by fund for the revenue neutral. I thought you just had to set the resolution, the rate in total, so I'll do the whole look.
I'm just saying that we can talk later, but I didn't.
No, they need to know this, because if that's true, that is a whole different story than just coming up with one revenue neutral, the rate that you're gonna put in the resolution.
No, I don't know that you're locked in by fund to
That's the
the
way the
rate
budget
by
hearing,
fund.
budget hearing is. See, that's why we always have to get the budget hearing right. Because once you lock in the rate on by fund, you can't change it.
Right,
At the budget hearing, you can change the gross, you can lower it, but you can't go in and like say, oh darn, we got too much in the park and we should have put it in general. You see what I'm saying? And that's why I didn't think they would do that, because that would really lock us down. Because if we had to have every fund at the revenue neutral rate at July 20th, I guess I was thinking, I'll talk to Jan a little bit, but I was thinking the reason they show that 66.412 down that corner is that's the revenue neutral rate that you have to be above. You have to have a resolution if you're above it. And that's the way I interpret it. Because the budget hearing is that way. On the budget hearing, if you publish it, you gotta stick with that rate.
right.
Okay.
You still got your calculator open as far as the
Yeah.
$150,000 house?
Yeah.
What is 1 mil up or down? Doesn't matter. Just what's that worth to a homeowner?
What is 1 mil?
Tax
Or
levy.
75.
Tax levy. So if you went to the 75 or you went to the 77.
Oh.
Just 1 mil.
Yeah, hold on here a minute.
That way we can do easy math and just multiply that times however many.
Right.
Give me just a couple minutes here. I told them if I started nodding off over here, just to throw a pin at me.
He's still talking though, isn't he?
I talk in my sleep, so it never does.
Somehow I believe that.
There's a green one over here.
Well, I get a little worried when I walked in today, is that pink thing's almost like these pink drinks here, so I thought maybe they're both, Jonah, we understand him, not maybe rubbing off on Scott here about this Go Power stuff.
Let's see.
I have been chilling out on the pin though.
Oh, that's.
Yeah, you have.
Can't do that.
Keeping that under control.
I thought there was one I could take. They have different examples here. Oh, there it is. Impact on it. Okay. Okay, so what you're saying is if we had a 1 mil, what would 1 mil and 150,000 be? So if we go to.
1 mil and $150,000 house. Yeah.
$150,000 house, 1 mil would be $17.25. So 2 mils would be 34.
Oh.
Yeah.
That's
So-
just for the county, that doesn't
Yeah.
include this all the others.
Yeah, so all you're doing is you're saying if you go
Yeah.
from 74 down up to
Yeah.
75, you're on a $150,000 house, you're increasing by $17.25.
Yeah.
That seems reasonable.
Yeah.
Yeah.
What was it, 17 what?
25.
1725, if I did that, my math right here. It says impact of total mills on an individual's home.
Yeah.
Okay. Okay. Any other questions?
So are we using the time frame here for Scott to come back or not?
Well,
Yeah, we gotta get a price.
This is probably gonna be the next meeting. I was trying to let Osage know the other day, because they're only on their second meeting, that's a half day at least. So this one here would be at least, coming back to it. I mean, there's a few things you've gotta decide yet. It could be anywhere from, depending on what you decide, 2 hours to 4 hours. Half day, up to half day. So whatever day works. to
So
do that.
Randy's question was, we're not gonna use the 115 today.
No.
That's, yeah, because I don't think there's anything to be gained by that.
No.
I think you guys you go through and kind of get roughly where you're at. I mean, it's not that you have to be set in stone. I'll figure out this thing about what she's talking about with if it's she's the county clerk, so it's probably right. I'm just not, I just can't, the state, if they did that. Anyway.
now, we could do a different type of publication potentially, but
Yeah.
what I've seen is everybody's just using their budget summary page.
Yeah, that doesn't even make sense. So I'm just telling you. Because I don't know why you would lock in every fund at that point. You would lock it in, because then you would still do your budget hearing whenever you set your budget hearing. So like the 16th, if you set that for the 16th, 10 days before that, you would do your budget hearing, wouldn't you?
You can do it all in one publication if you know your rates.
And see, I wouldn't do that. What I was thinking is, you do your revenue neutral rate of whatever that is, the resolution. You set the total, and then you come down to 10 days before it, and I don't know if the wording would be different or what.
Yeah, I don't know if it would either.
But to
It probably
me,
would.
yeah, it'd be different. It'd probably say whatever it says, the revenue neutral rate and all that is used, and here's what the rate came down to. Here's the rate set, here's the 66. You have your 10-day, that's what I don't know, is do you have to have a 10-day waiting period for both? That's what I was asking.
You do.
Because to me, back on the 20th, all you're doing is you're saying, we're either gonna go above the 66, or we're gonna stay at the 66, and there's a resolution that has to be done, and you wouldn't put the full, because they're just still gonna make decisions on how those funds, that's why I was, I guess, struggling with that a little bit. We can talk about it later, but Jen probably knows the answer to that, don't you?
Blame it on Jen.
Yeah.
No, she does, she probably knows the answer to that, I don't know. Any other questions?
Well, nothing else, yeah?
So we're gonna put it on the 12th, are you?
12th or 13th or 14th?
13th. Maybe not a good day.
Okay.
As far as, of course, I don't necessarily have to be here. but I've got
I mean, I
some
could come back on the
meetings that
12th, if you can tell me, if Tina can send me an email and say this is this, kind of the big picture.
Yeah, the 3 questions.
Yeah, then I could come back on the 12th with, here's kind of the ballpark, and then we could start there on the 12th.
And that'd be the morning of the 12 works session, right?
Well, we have a regular meeting that day, so
And that's
yeah,
at
we could do it.
Oh, you can do it like this again, where you do it.
In the morning.
yeah.
Start at 9 or
And then
something.
we'd have our meeting, and then if we wanted to follow
And I
up,
could come back, yeah, at the afternoon, yeah.
we'll give you half an hour.
Yeah. Goodness. Yeah, don't talk to me in my sleep, because my brother used to do that when they just started. Oh, goodness. I'd say things I should never say.
Well, they can give us a big question for our next meeting. 3 questions before.
And so between now and then, you would probably want to have a work session with Road and Bridge
Yeah.
to kind of get some of this stuff
Absolutely.
down. So,
Well, is there any more action then for this? If not, I guess we can end this work session and get ready for our general meeting. That would okay? Tina, you got anything else? Scott? Okay.
Did we let people know that everything after 15 is up by time.
Well, I'll see what I can get.
Otherwise, we have a 45-minute lull.
Right, I'll have to just see what I can, I kind of warned some of them to.
I
that we
mean,
know
I could stick
earlier.
around if you wanted to have a general, I don't know what Bryce is up, you know, what his schedule looks like. I mean, if you wanted to have like a, if you thought it would be value to have a discussion in that same, with him, I mean, about roads or
He done on the agenda today.
Yeah, he's got things.
going on.
Yeah.
Okay.
Okay. Yeah.
Oh, yeah, with the, that's true.
Well,
Athletic.
there's more to it than that even, so.
Yeah. Okay.
So Jim, adjourn this meeting, and Scott, thank you very much, and helpers very much.
Thank you for putting up with me.
Helpers.
We will come back with 80 point, no, 70.
Whoa.
If I find out something from David, I'll email you.
Okay.
You know, that debt limit, 'cause that would give you an idea of kind of the top range.
We'll be under it
Okay.
this year.
You what now?
We'll be under it this year.
Sorry.
Don't fall off the
Sorry, I don't know
camel.
why it does that.
I'll try not to. Yeah.
Are you gonna?
That'd be awesome.
Are you
I'll-
gonna
we'll try to
recess
get
until
Come back all
12:30?
black and blue.
Yeah, we'll
Yeah,
try,
yeah.
try to get some
Yeah.
video, okay? Okay. See y'all.
Thank you.
Have a great day. Yep.
Enough time.
Camera go off.
Not yet.
This conference will now be recorded.
About the 7 years and about this, they never saw it again. That's how they accomplished it.
No, I know some of those old laws were never taken off books.
It's just like,
I know you still can't ride your horse on the sidewalk in Marion.
and
Even though
now
maybe
it's
you didn't
only
know,
thing,
probably.
in some cities,
Sure
you can still engage in a gunfight down the middle of Maine, except for the obstruction of traffic. We've got to.
You gotta close the roads for the gunfight.
Are we online?
Yes, everything's on.
Okay, this county commission meeting of June 28th. We're now a little after 12:30. We're going to start it off with a flag salute.
I don't want to either.
I pledge
Allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all.
Just the chair, because it always rules.
And we'll open up with the public comments, either online or in the building. We have nobody here at the building at this time. So online would be one if you want to unmute your mic and state your name and your comment.
I did give you a comment from Jerry Mendoza that I received by email. So I just wanted to draw your attention to that. You all have a copy.
Okay.
I just wouldn't mind addressing that, that Mendoza's comment that Bryce isn't just shrugging people off. And it's a personal issue, and he's got some stuff, and that's all the further I'm gonna take it. It needs to be weighted, that he does have some stuff going on.
Okay. Jerry Mendoza's comment, I think the board needs to hear from Bryce, and, you know, like you said, yeah, before we address it publicly, and then we can address it.
You know, we've got issues all across the southern part of the county.
Well, yeah, but this extends past his job or.
Yes, I think there's
Sure.
other field here. that's-
Extenuating circumstances.
Yes. So, you know, people can be under strain at a certain time when somebody calls and might say some things that, you know, that other people don't understand too, so. We will address that, Jerry, with Bryce and see how things are with Bryce. Moving on, no other public comments on the screen?
No.
Okay. So, agenda approval. We have changed the budget work session at 1:15 to building discussion. We need to talk about buildings, so we've got a little gap there. We'll take that gap and discuss buildings and see where we want to be and see if we can't get some of that worked out. Otherwise, we'll be here. I think we have 3 o'clock appointment even still down here, so we'll try honoring that. Hope they're following us online. Administrative business. Tina, do you have anything to start off with?
I do.
Okay.
In your packet, you have the rate sheet there from Hook Publishing, which is required to be submitted on or before July 1st each year.
I have a few questions. First of all, how much did we spend with Hope Publishing last year?
I can get that for
And
you.
these are all questions, don't have to answer right away, but before we approve it, I'd like an answer.
There's
How
not, I want to make it clear, this is not up for approval
Oh,
right
okay.
now.
It's
We
just a
approve
notice.
the legal publisher at the beginning of every year,
Okay.
but they're required to provide their rates to us
Okay.
as of July 1st.
So there's no action to be taken?
There's no action to be taken on this. This is purely informational, but if you have other questions, I'm happy to
Okay.
get you information.
Well, I thought with fiduciary responsibility, at least ask a few questions.
Sure, absolutely.
The first one is how much was spent, how much did county taxpayers spend with Hope Publishing last year?
Okay,
The second one is, in that long letter, there was nothing stated about what their circulation is.
okay,
How many households are actually reached? Since we're providing information at no cost, and then this company is charging for access to the information, I'd like to at least know how many homes are actually accessing it.
In
And-
Marion County.
County.
And you do know that we have to have a published?
Yes.
Okay.
Yes, and that was made clear in the letter.
Okay, yeah,
That we have no choice.
yeah.
Absolutely no choice.
As of this time.
But I do think we have a choice on the rate.
Yeah.
Then the second one would be, what are comparable rates in Harvey County, McPherson County, and Dickinson County? I think it's reasonable for the board to know what other counties are paying, since we have no competition.
you said Harvey,
Yeah.
which one?
McPherson?
It's,
Okay.
it's not
In
entirely
difference.
true from what I understand. There's competition, just not competition within the county,
Okay.
I think.
Okay.
There's other avenues you can take, but
But we haven't had any.
As long as you want to-
legislative changes to that.
I
That I know of.
that I know of. I haven't been told that there's some things that can be put online now that couldn't before.
Right.
There's some things that,
I just thought those were reasonable questions.
Okay.
That's good.
You bet. I can follow up on that
Thank you.
before the next meeting.
Thanks.
Okay? Anything else before we move on? Okay. In your packets, you did have some revenue reports. And then we have the minutes of June 21st and June 22nd.
I would move to approve minutes June 21st and June 22nd.
second,
Have a motion by Dave Mueller to approve the minutes of June 21st and 22nd, and second by Jonah for June 21st and 22nd. Any other conversation about that? Nope, to follow that? All those in favor say aye.
Aye.
Aye? Opposed? Nope, nobody? 5-0. Better make sure it's the right color this time. Had that red one out.
Oh, don't. It would not be the end of the world, probably.
Oh, okay.
it was just a serious day.
Thank you. We had the closeout hearing for the CDBG grant. And our grant administrator at SCED realized that there had been an error on the documentation they prepared for that hearing, and so they just updated I think what needed to happen here is on this release form, it needed to show the amount that we actually requested, not the total amount approved. So the previous one that you signed was for the full amount of the $167,000, and we didn't utilize all of that. So she has corrected it and asked for a new approval of this form for the $110,822.15.
Do I hear a motion on that?
Make a motion to go ahead, authorize the chairman to sign grantees release form in the amended version.
Second. Have a motion by Jonah to sign the new form, and second by Kent Becker. All those in favor of that, say aye.
Aye.
Aye. 5-0. That way we can't enjoy $167,000.
And this is for line 10, and that's where you'll sign.
So the administrative fees go down too.
They had all of that together, and that was already reduced.
This just keeps it there.
Right. In your packet, you had an agreement for school screens that Deidre has requested that we have approval of and receive the chairman's signature on.
I'd move for approval.
Dave Mueller makes a motion to approve their signature on this. Do I hear a second?
Second.
Second by Dave Crowfoot. He had his hand up.
Yeah, I seen it in the reflection over
Oh,
here.
okay, all right. Dave Crowfoot second. All those in favor of that, say aye.
Aye.
Aye, 5-0.
Ah, I can see him. I can see him right there. I can see Kent, him. Then I see Dave.
Oh, over there, okay. So what's the
I need a little mirror. So
I got everything strategically placed. There's a little mirror over there.
Okay.
Watching the back of your head.
You think
all kinds of
that's the
stuff.
best seat in the house?
No, I wouldn't say it's the best seat in the house, but once you learn your surroundings, you start to see things.
Okay. We do have, and you all have a copy of it on the table. On Saturday, Chairman Dahlke issued a verbal disaster declaration for the heavy rains and the storm damage and flooding. And so we have for motion and vote the ratification of that, and it would be the proclamation of a local disaster in Marion County.
I'll make a motion to put that into full effect.
Have a motion by Jonah to go ahead with the proclamation of disaster. Do I hear a second? Second by Dave Mueller. All those in favor of that, say aye.
Aye.
Aye, 5-0.
Which paper we sign?
Yeah.
It's
I
fine.
got one right here.
Yeah, that's fine.
See you with your hand up over there, then I'll.
Need to give Randy a mirror so we can see.
Yeah, that'd be neat to,
Can't see anything down here.
I'd have to.
Put him up there.
Yeah.
Get some light.
Every once in a while. Yeah, push it, yeah. Now, if one of you decide to not vote, if you made the second and not vote for it, you may have to catch my attention on that sometime.
Sometimes you do that just to push the vote through, so it's up or down and done with. I got to think about that this weekend too. It's like, I've seen that happen. Just, it makes a decision to be made.
The last thing that I have is an update on the flagpole.
No.
So, you know, you had asked us to go back and get more apples to apples quotes, and so it took some time to do that. When we went after you approved that bid last week, that immediately Judy followed up with them and they said, oh, well, that quote was only good for 30 days. And we had been beyond the 30-day time frame by the time we had followed back up and gotten all those clarifications. And the price of that has now gone up by $1,000. So if the total amount for this particular company for the flagpole, the installation and removal is now at $11,070. And so I don't know if maybe we just need to put that on, whatever the board wants to do, but maybe we need to just look at repairs for now and put that on hold, or go back to the drawing board. I
Wait
don't know
till
what you
spring,
want to
the
do.
prices go down.
But the price of aluminum apparently went up,
Yeah.
so.
Did I hear any conversation on this issue?
I already took the heat for these guys to go ahead and do this poll and for them not to honor it. I get it, demand charges and prices, but there wasn't a lot of people very happy with that decision, and for them not to hold it and understand that we made that. I'm not really willing to stick it out and put another $1,000 on it.
I voted against it, so.
It's kind of a,
For once you did the right thing, huh? Is that what you're saying?
maybe they don't.
Maybe listen to Ken.
Wait till the price of material goes down after first year.
Either that or even just go ahead and put it on this burner for a while to see if there's any other avenues. It just seems like, I've seen them put it in over here on that pole over here, and there's not a whole lot. So, Dave.
Tina, you did have a bid on repair work that would probably still be valuable.
I'll verify, but I mean, I think the high bid, including the bucket truck, was, it seems like it was around $1,600 to do the repairs.
I'll make a motion that the repair of the flagpole does not exceed $2,000, and we'll leave it up to the clerk at her discretion.
I'll second the motion.
Have a motion to repair the flagpole at no more than $2,000, and leave it to the county clerk's discretion. That was made by Jonah Gehring, second by Dave Mueller. All those in favor of that, say aye.
Aye.
I see 4 ayes. I'd like the 5th aye. It's unanimous, 5 ayes.
I'll see if I can get it done under that. I mean, I'd
Yeah.
like to do it
Yeah.
as reasonably as
Yeah.
possible, but I hate not having a flag up at our building.
Yes, we need that
Yeah.
flag.
Yeah.
Absolutely.
Yeah. Okay. That's all I have.
All righty, administrative business over with. Move into appraiser, personnel hiring. Nikki,
Hi.
good morning, or afternoon, it's afternoon now.
It is afternoon.
We started in the morning. Nikki, you're here to tell us some good news?
Yes.
Okay.
Can I say it out?
Yes, yes.
Okay.
It depends if you want it said out loud, or if you want it said.
We both signed the contracts
Oh,
Oh, good.
as presented.
Okay, I will go ahead and tell them. You go ahead and tell them what you are now.
I signed a contract for the Marion County appraiser, and Carl signed as assistant, I
Okay,
believe.
okay.
make the motion that we are approving Nikki as the Marion County administrator.
Appraiser.
No, I don't think you want that one.
Thank you.
doesn't want that. Thank you. No, thank you.
Contract has been negotiated and agreed upon by both parties, so that's my motion.
Okay, and with Carl as his assistant. Okay, that's the motion. Do I hear a second to that? Dave Mueller, second. I would like to read the contract though on pay and stuff, and I don't have my copy of it. Real quick, like.
Okay, I'm sorry. Second was,
Second.
okay.
Yeah. Okay, for Nikki, we might tell the general public here that once county commission makes this vote and everything, Nikki's assigned for 4 years as an appraiser. She can resign and do things like that, and she has to really, well, we know that she's gonna do her job, but I don't, there's, it's a 4-year contract is what it is.
Yes.
And so I will read you some of the terms here as is for pay, so that people wanna know what it will be. Compensation will start out at $52,000 a year for the first year. After 1 year, will be raised to $54,000, and there is an option for up to $2,000 more if Carl decides that he's got Nikki completely trained in everything that, you know, that she's had maybe some experiences that she needed to go through. Why, if he resigns and everything, then she would move up to 54. After 2 years, then providing the assistant appraiser is no longer, after 2 years, it would be pay plan step 1, that would go to 58,302. And then after 3 years, and no assistant appraiser, the pay plan step 2 would be 59,467.
Just to
Yes.
clarify that that would be up to Nikki's discretion if Carl was needed.
Okay, well,
I mean,
yeah.
You're the appraiser.
Yeah, I mean, yeah, we need to know that
Yeah,
too.
but
You're
Carl-
not the assistant.
Carl may say after a year, I'm done.
well, yeah, but I mean, it
Yeah.
is still up to if
Yeah. So,
Carl is no longer there and the pay was to increase, it would be because of Nikki's decision that she didn't need the assistance.
before I take this vote, I'd just like to tell you, Nikki, thank you. You've been a county employee for 10 years now, or more?
Just over 10 years.
Over
yeah.
10 years?
Yeah.
You started at the bottom, you've come up through the ranks. We like to work with people that's done things like that, and as a commission, that's why we give you the offer for the contract, and we know you're gonna work hard. We don't have no doubts about that, so with that, that's all I have to say for right now, and I appreciate you coming on board, and
Thank
with
you.
that, unless you have something you'd like to say publicly right now, before I take the vote, or after I take the vote, why?
I don't think I do.
Okay, all right.
I wasn't prepared to say something. I mean, I do appreciate the opportunity the opportunity to grow and learn and become the appraiser, so.
Good.
I do appreciate that.
You credit yourself because you put your ducks in a row in the right places so you were eligible when the time came.
With that being said, I'm going to ask the commission to vote and for this, and then if there is any other final comments, well, then we can make them. All those in favor of Nikki becoming the Marion County Appraiser, say aye.
Aye.
Aye, 5-0. Thank you, Nikki. Now, commission, do you have any final comments to give to Nikki?
Good luck.
Yeah.
If we have time, I was wondering if we could go into executive session to discuss personnel.
Okay.
What I just handed you, we are required to pass a resolution to appoint that appraiser position. So
Oh, yeah.
I have prepared a resolution. It'll, and
Make it
the
official.
commission needs to actually take a motion and vote to adopt that.
Okay. Resolution number 2021-14, a resolution appointing Marion County Appraiser, meeting criteria set forth by the KSA Chapter 19, Article 4, and amendments thereto. Whereas the Board of County Commissioners pursuant to KSA 19-430 and amendments thereto is directed on July 1st, 1993 or July 1st of each fourth year thereafter to appoint a county appraiser to a term of 4 years and until a successor is appointed. And whereas the Board of County Commissioners finds that Nicole, is that right?
That's
Nicole
right, yeah.
Reed is a certified Kansas appraiser and is qualified to be appointed as appraiser of Marion County, Kansas. Now therefore, be it resolved by the Board of County Commissioners of Marion County, Kansas, that Nicole Reed be appointed as of July 1st, 2021 as county appraiser, and Marion County has a 4-year term ending on June 30th, 2025, or until a successor may be appointed. Everybody's already voted, okay. I have to do a different vote for this one then, don't I?
Move to approve.
Okay. I'd make the motion to approve.
Second.
Second by Kent. All those in favor, say aye.
Aye.
Aye, 5-0.
I didn't know.
Hey,
if you
it
could
took-
sign it.
I got my, yeah, I got my, yeah, you all said this.
Sorry, I thought you said that you had voted.
I do have some.
Everybody, yeah, I heard.
I'm Carl's.
Okay, so the board needs to, we need to have that, so we can.
Who do you want me to give it to?
Here, I'll just. Okay, you ready? Thank you.
Did you initial every page too?
Do what?
Did you initial every page?
I did not.
Prick your finger to do it?
No.
Oh.
I can, I guess.
And do we need a motion from Carl for the system too?
I think that would probably be good since you did it by separate agreement, so yes. And then here's the, for your signature.
That's for your signature.
First one, Tom?
That one is actually for Carl, so you'll probably want to make the motion.
Okay. Make a motion for Carl Miller to be appointed as assistant appraiser.
Second.
That's not a term though, correct?
No, that's for.
That's not a term of 4 years.
No.
That's just,
No.
yeah.
The,
okay.
the agreement that
That's-
you're approving is for
Yeah,
1
just
year.
agreement, okay.
Just a joke.
Second by David Mueller down there. All of those in favor, say aye.
Aye.
Aye, 5-0.
Yes.
Okay, personnel performance, is that what you're, for hiring?
Yes.
Well,
Well,
hers is not for hiring,
not
it
for
would be
hiring, sorry.
personnel performance.
Yes.
Personnel performance,
The hiring was because of what you just did.
okay. Tina, or Nikki, what kind of time frame do you think we need to?
10 minutes.
10 minutes. Okay. I'll put it- All right, I'll just do it anyway. I move that we recess into executive session in order to discuss personnel pursuant to KSA 75-4319B, personnel matters of non-elected personnel for performance with the board. Brad, do you need Tina in here too?
She can stay.
Okay, and Tina, for 10 minutes.
And did you get Nikki in there?
And Nikki, from 1 o'clock till 1:10. That's a motion. Is there a second?
Second.
Second by Jonah. All those in favor, say aye.
Aye.
Aye, 5-0.
Okay. Back at 110.
I was on the second half and I didn't hear.
This conference will now be recorded.
Okay. Out of executive session, no decisions made. Thank you, Nikki. And,
Thank you.
Have a good day.
You too. Thank
Yeah.
you.
We're a little bit ahead. We're gonna move into building discussion. And this is sort of unplanned here. I mean, we're just trying to fill a gap here, but it does something we wanna talk about for our budget, so our budget. And we'll start off with the guy that boldly said the building was we'd put $500,000 slot there. I think you've made some decisions maybe that you.
I haven't made any decisions,
Okay.
Mr. Chairman.
Okay.
It's just, we've talked about a number of building projects.
Yes.
Talked about multi-use, and at the work session, I suggested, well, let's just go ahead and put 500,000 in the budget and move forward. I really didn't hear much from any of the other commissioners on it. Y'all kind of give you a blank look. And then on the drive home, I go, that's why I got the blank look, is because that was just 3-4 mills right out the gate. And it's really, you know. So I text Tina back, and since I was the one that threw that out there, we're still gonna come back and discuss it. It wasn't a decision, it was just a spot in the budget, and that doesn't mean, I just said, could we lower that, or asked if we could lower that number, not take the number out, but to lower that number so it isn't such a huge impact on the mill levy. And also coming back to the discussions, as we had learned, that also sunk in part of the 6-month training we've had now. We could do lease purchase. So why do you need to take 4 mills out? Why not use the, so my thought was just to make it a little bit easier, because I knew they were chuckling and going, yeah, you guys spend more money, raise the mill levy. So it was not taking away the validity or the need of the building. So yes, I did make a text in the work session to lower that amount, hoping that because my thought was that today we would have a mill levy number come to us, which we did not. And so wouldn't have mattered anyway, but it's kind of like the 26 million. Well, why put in 500,000? You know you're gonna come back with the bill again. So get back to the legitimacy of buildings.
Yeah. To be honest, as far as the lease purchase goes, or if not, you know, I guess the way I kind of blank stared at you was probably because I was expecting that 500,000 to be in parentheses, the line item, and then a lot of times we'll put parentheses.
I don't know about parentheses.
Okay.
That's new. No one told me about.
So the parentheses is your
yeah. Oh.
Yeah. So it's your
Well, now.
Let's put 'em in
it's
there.
your target goal.
Okay.
And you throw some money in there,
Okay.
and then you'll cash forward it. So then if you tie that to a mill or a half a mill or whatever, in 5 years you got enough money
Yeah.
to do it.
Yeah.
Or you change path and you use that amount for your lease purchase.
Okay.
Either way.
Okay.
You
Parentheses now. I
Yeah,
know
parentheses.
that. I did not, no one told me about it.
Yeah.
But that was not in the training session.
Yeah. Some of these things you pick up on the fly.
Right.
English is a tough language.
You gotta be in there a time or two and
Yeah.
get you.
Yeah, it's
Your
a
feet
whole,
wet.
it's a whole different animal than business.
But I think, Dave, though, I think every commissioner that's ever looked at what this multi-purpose building
Yes.
may be, other than adding a building on for the health department, adding on to it for a health department or something like that, I think that's where we have to decide where we really want to be and come up with a plan for the building and start to pursue it. And I thank you for leading us out here in this way.
And then pulling it back.
Well, a little bit.
Not necessarily.
It's still on the line.
We're still talking about parentheses. You didn't just say
I
next
didn't
and all.
put it in parentheses. But still.
So, you know, I don't know how to tell anybody else that the only way I can look at it is I don't want to rent all my life, and I don't want to leave the commission renting all their life with a building at $1,600 a month or so up there for the health department. I think that needs to be looked at. Whether maybe other people feel better than just there is purposes for renting sometimes and not. But if you look at 20 years down the road in the health department, 35 years down the road, the health department's been around since I've been around 15 or 16, 17 years. So it's been here. So 16 or 17 years times $1,600 a month would be a pretty good little bit of money if I'd have been paying rent all this time on that. So.
Sure. So specifically, what is Scott looking for us to have building plan or a target or a goal? Or
I think dollar amount's what he.
A dollar amount.
Yeah, and how we want to address it, and if we want to do it, like just what you were talking about, whether you want to address it by.
Yeah, if we were gonna put it into capital outlay and try to build
Yes.
a fund to do it.
Yes.
If we're talking about a lease purchase, we just do it.
Yeah.
Well, I think he's wanting to add potentially, what he was talking about most recently was, having a line within the bottom of the general fund where you list out the different building projects, and then you would allocate a certain amount, which would be either toward the building or toward a lease purchase payment, because you'd want to budget those payments,
At least, budget for a payment.
Right.
so.
I look at the budget as our strategic plan, and that this helps target that
Right.
strategic plan. you have a goal, just like putting that money, a zero besides multi-building tells me you're not committed to
Not gonna do that.
Or
You're not gonna do anything.
You put some money there and you rob it and you put it on
Well,
something else.
Yeah.
You know, you get an
That's,
emergency.
that's what you're trying not to do.
Right, I know, you try not to.
You're trying to put that, we're gonna do this, it's just when.
Very true.
Well, we've been talking about this building since I've been on the commission, and it was talked about prior to that,
Oh, yeah.
because it was thought
Yeah.
about when you built the jail, because you designated the area for it at that time.
Yes,
What-
yes, correct.
I mean, so no dollars involved, we could talk parentheses dollars. What buildings and how many parentheses dollars are we talking about? We're talking about county shop, we're talking about this building, we're talking about, what else? We ought to put them all in there, and we can put parentheses too there. It doesn't matter if there's
I
a
like
zero
it.
next to it, I mean, it does, there should be something, there should be some sort of
Well, I think
value.
not only do we know there's a need for the to remove storage and stuff from up there, and also to have the place, the ability to, if we'd had this building already built back when we started, COVID might have been able to go right through it
Yeah.
and work right through it at that time when we had COVID procedures, but, you know, that was just something we didn't have. But also, besides that, we know that Road and Bridge has got a workshop up there that, I mean, you talk building, that's not
It's outdated.
sufficient for, sufficient for today's equipment.
And I've got double concern on that, because not only is
It's
it
unsafe.
efficient, Dave hit it on the head, it's a safety issue for
Oh, sure.
our employees, and that's big. Working out of a 50, 60-year-old.
I think you're talking $1 million there.
Oh, yeah, easy,
Easy.
at 1.5.
And, yeah, and you may even be over.
That's today.
You may be over 500,000 on this.
Yeah, yeah. You
I
might be
mean,
able
what
to.
we thought was 500,000 even 2 or 3 months ago might be
Right.
600, 650.
Kent, I'm not, did you make it to Morris County's building, the shop building? Have you seen theirs?
I've been by it.
They built a wooden one,
Bryce was explaining.
and it's very functional. I mean, it's very functional, not very big for a number of equipment, but they don't have as much equipment as what we have, but it's very functional. And so, and they're pretty proud of it, I mean, and they're nice. It wasn't extremely costly, I think it was $400,000 to $500,000 at that time, but
Whole building.
whole building, but they put a nice lift in it, or overhead, I think, some lifts on it and stuff.
Or slab.
So, you know, I originally figured a metal building, but there is other avenues maybe that the cost can stay down somewhere too, Ken. I don't, you know, that's where do we want to stop at when we do build a building like that, you know? What do we?
All we can do though at this point is throw out a figure.
Figure,
And
yes,
hope that it comes,
under that,
well, anywhere
close to it, yeah.
plus or minus.
Has any of you guys seen the new state building they built up there?
I have not been in it, I watched it being built, but I've not been in it, yes.
That's the Cadillac there.
Yes, very nice.
We could go there and work backwards.
Mhm.
Could they get, I think, all the trucks in and wash them at the same time?
Because the county building just about has to come down, doesn't it? The old one.
Well, that's, your engineer presented you with a plan, he was gonna start on one side and
Don't
then
have-
Over there where there's
able-
nothing.
able to keep the other one operating until it goes down, then he's got
Yeah.
another, he's
So
got
it's
the half.
built in two halves, basically.
Right, phase it in, which could even be phased in over.
I don't like where it's at, but I guess there's not much.
Yeah, I
we can
don't
do
like
about
where
it.
it's at.
I know that nobody does, and that's the sad part of this whole thing. If you build a
Not
new
a good
building,
place.
Well, what is right? I mean, it kind of comes down to the transfer station too, in my opinion. I'm not gonna speak for everybody else.
Yeah.
In my opinion, transfer station, what is right costs more. But if you spend the money anyway, shouldn't you do it right? So if it doesn't belong there and everybody says that, oh, that's a bad location, why would we want it back there?
But what are you gonna do with it? You're gonna be stuck with it. If you build someplace else, you're gonna be responsible for that piece of land.
That's where our land bank come into handy, and we can actually address that issue.
At one time, I think you had someone interested
yeah, we did
in
have
buying it.
I don't know about
that
nowadays, but
property.
yeah.
But we would, I mean, that's part of it, get the land bank.
Well, you can market, you can still sell a property even without a land bank.
Yeah. I think if that's a decision, that where it's at is, who says it has to be in Marion? It's a first shop. I don't know. I would just like to see it accessible to get out on the road. That seems like you pull your trucks out of there, and stuff, and get it out on the highway and get it, going one way or the other. I would like to visit with Marion and see if maybe they have a spot for us.
Well, I think we could get free land in Hillsborough.
So, it's
We
just.
should build it up. Canada, it's just open land, it's halfway to everywhere.
Same thing as the
Hillsborough,
ambulance building, that was my proposal
Yeah.
with that, but we didn't have no sewer, we didn't have water and
It's
stuff.
efficient.
Well, you'd have to buy ag real estate.
Yeah.
So, but Canada's a great, it's the greatest location for Marion County to be in the center. I mean, it is the center of the
Yeah.
county. And if we're gonna go the same place
There's lots of highways right there.
plus our new highway and stuff, and plus you can go north and south out of there, so within a very few miles.
Then what kind of dollars are you looking at? I know, like Jonas said, you wanna do it right and do it in the right place.
You get to start from scratch.
You're right.
Yeah, you're gonna have to buy,
Water, sewage.
but you're gonna have to buy 10 or 15 acres minimum.
Oh, yeah.
Minimum.
Sure. The land won't be the issue, it'll be all the buildings.
And your infrastructure.
Infrastructure.
That's the biggest thing.
Yeah, you get a dump 40 grand. Well,
Well,
it used
you
to be,
got-
it used to be 40 grand.
I don't know, is
Just to
Canada
get
on
infrastructure
rural water
there.
district
Yeah.
2?
It's more than that.
There's lines going this
It
way.
comes right down the highway.
Yeah.
Rural water district 2 does,
Okay, yeah.
but there's no sewer system there.
So, it's, no
So
matter
what's,
when
what's
you,
the priority then? Is county shop priority over multi-purpose building?
No, priority, in my opinion, priority would be line item. Setting that line item what it is. And then it doesn't mean that you're not actually getting anything done, but putting down on paper that you're wanting to do this. And then next priority would be how much you're gonna put into that line item.
so
So what you need to do is figure a lease purchase payment on $1 million, $2 million. And, well,
and do what with it?
well, that's where you'd have to figure in your line item to cover debt service and maintenance.
But I'm, when I hold two fingers up, we've just mentioned two subjects.
Yeah,
And
right.
if somebody says which one goes first, and so my question being was what you was just saying, Kent, when you say figure 1.5 or 2 million, whatever, would you figure would you try to build two projects with that one?
Well,
lease?
I don't know if you can prioritize it.
Okay.
I'm just saying, use a dollar amount to start with, and then base your lease purchase and maintenance on that for your line item. That doesn't mean we're gonna build this first or that first.
Right.
We're
Okay.
just putting them down.
Yeah.
That's what I was putting here was storage building, 500K and or lease purchase. County road and bridge, 2.5 million and or lease purchase. Those line items need to go in there. And then the next discussion is how much do you put that line in?
Right. We don't have.
Well, your line item would be basically your debt service and maintenance. That's what your line item would be, not the 2.5.
Well, no sense, I mean, not even saying that you're gonna take the lease purchase right now.
Yeah.
You might build it up for a few years and then trigger it and go.
And what you see in there is this county shop we have right now, we was talking about county shop, we have 2 stalls, and that's all you have. Over there, they have 2 stalls too, and that's what they have in Orange County.
Yeah, but you can't even get a maintainer in over.
No, I mean, that's, yeah, they can do other things, they can drive right through their shed and everything.
Yeah, there's.
In the winter time, when you're trying to get some stuff rebuilt, you gotta have the doors open.
Yeah, and things, and so yeah, how big, that all comes a little bit later though, after you decide you're gonna do something, just get a plan, but then get a location. And whether you go back like Bryce's plan, it's been talked about, there's room enough probably
I
up there
mean,
to do it.
it would cost some money to move away from up there.
Yes.
Just
Oh,
because
yeah.
of the underground
Yes.
tanks and
Yeah.
stuff.
Yeah.
You know, be responsible for those tanks, the rest of your life.
Well, you'd have to have a lot of testing done to make sure you don't have any contaminated.
Dig it up, farm it out. We've done that before.
You know,
Yeah. What other buildings?
So the parenthesis number for road and bridge shop, was that, I heard and wrote down 1.5, is that right or wrong, for the parentheses?
We haven't decided.
No, I threw out 2.5. I said 1.5 a minute ago.
I said $1 million.
You're within $1 million, Tina. You're within $1 million.
Yeah.
All right, I'm just erasing that. I guess you'll tell me.
It's
There have
just-
been
maybe it's
negotiations
doable
yet
for
on what-
1.5 if you do it in phases,
she's trying to look for
Number.
a number so that it gets put in that line item. So when her and Scott talk, it's kind of there for us the next go around, so. It's not really a decision, it's just kind of what everybody's okay with. I mean, just a ballpark number.
So if we had that 1.5, like you said, then what Scott's wanting then is, so if we want to make a payment on that,
It would be just like a goal of what we're trying to save for or make a payment on, just like we've done it in the past.
Okay.
What's the number, that's the goal number.
only
For the
with
total
these,
project
with these
cost.
purchasing, we
And then what's a 10-year payment on a 500? Well, we could throw some numbers in there.
yeah, I don't care. This is the board's decision here to discuss it.
That's 5,000. It's a cheap building.
How'd you gonna eat? Well, my calculator's giving me all kinds of weird figures on my phone. There's another one in here somewhere.
So you put it back up, but it's.
Yeah. Washed out.
But that's a plumber that runs up and down that road. He spotted it, so he smelled the radar.
Is that the truck?
No, there's a marker that was down in a ditch and the culvert's washed out, so he found it in the ditch and stuck it back in the side of the road for us.
That's pretty much it, yeah.
Probably looking at, you're gonna, on 500,000, you're probably looking at least purchase payment of somewhere between 25,000 a year.
25,000 a year.
Yes.
And then 1.5 million, we're really looking at 3 times that.
3 times.
So 75,000.
But yet, putting all this together,
So there's
Yeah.
100,000.
yeah, putting all this together, we're still less than $1 million a year
Yeah.
Right.
for lease purchase payment.
And you
When you
also-
first suggested the length of term, it really, because what we did with the Tampa Road project is 232,000. That's a mill and it was over almost 2 mills when we started it back 10 years ago. And that was a hunk of our budget. And so what you're saying with the lease purchase is that this is still doable with a lease purchase, even though it's a longer time.
Right.
And I come from cities, just like this guy did, and where the RDCD&G, they go
Yeah.
25 and 30 years for sewers, and all of a sudden you're still paying on the sewers or the water tower or the
They're
water
done.
lines, and they're,
Worn out.
yeah, they're worn out sometimes. And I didn't want to do that with a long term. That's why
Yeah,
I'm a little
but you know, if,
hesitant.
if you're looking at new facilities,
Building.
10-year,
Yeah, building's typically 25 to 30, so if you do 10.
we ought to be able to get 10 years out of them without a ton of maintenance. I mean, there'll be
Correct.
maintenance,
But
but
We're
the
just
thing
starting
is-
over here.
the
This
thing
is
is
coming up on 10 years for jail. And we've
None
seen-
of us,
and we've had to replace the air conditioners.
maybe some of us, I don't know, but none of us would probably be in these seats when these get paid for. But the ideal thing is to keep that going, even though you don't have that payment anymore. So that way when that building does die, you've stockpiled some money
to replace that building.
Yeah.
You
Yeah.
Also got sales tax, you could
Whoa,
raise money on that.
Well, what's the,
that's good.
what's the, yeah, and that'll have to go to the club.
Which is, well, doesn't seem to be very popular anymore. That person got hammered on that deal over there.
So we got county, we got storage, what other buildings? Just trying to throw some,
Kick it in here. Tell me what else, what I've got.
what did we forget?
Any office space
Office space.
for the health department.
We may have some extra office space down the road here.
Well, do you add that
How
into
much is over there?
the storage building too?
3 offices.
Well, I wasn't sure what you're talking about on your multi-purpose, because I'm hearing a lot of different feedback as far as what that's gonna include. So you've talked about storage, you've talked about potentially.
Health.
Right.
Yeah, the minute you figure health, it just.
Right,
gotta have-
I don't know that it makes sense to really put those two buildings together. You're kind of talking about a storage building and then an administrative space.
The only thing is there was space left on the one end to do that with if it wanted to.
You got land,
Huh?
you have enough land.
We have enough ground, yeah.
You wouldn't wanna make one building that could handle storage and then enough room for administrative?
Oh, I think you
Well,
can do anything you want.
That's what I'm asking.
Yeah.
I mean,
I mean, there's,
then you still have to consider other buildings that are around there and parking and what else is near there. Because if you add that type of a public access busy
Have parking.
building, are you gonna have room for that?
Yeah.
If you're just in
Does
that
it change
location.
your parking, it will change.
Which is ups
you'd
your
have-
value.
you'd still have some parking out here.
So that, it needs to have its
Yes.
own line item, whether you use it attached to that building or, so you say you do 250,000 on that piece, because you're gonna pay for extra parking and an extension of the building. Then you could use those two monies together.
Yeah, you just have to consider what makes sense to go together and the locations.
Ken, you were talking about the 25,000, we're talking about annual payment or monthly? Annual? Or
No,
500.
monthly?
No, that would be an annual payment.
How many years? 10.
10 years?
That's only two.
That's only 250,000.
No, that wouldn't be right.
Yeah, that's what I just did. I did 1.5 million with a residual of virtually nothing at the end of 10, because I'll calculate that in whenever. I just did one of these for another building, or for one of the cities. With a lease term of 10 years, 120 months, 2.5%. You're going to be under 100,000, but you just barely, because it's 78.35 per month, or roughly you're just a little under 96,000 per year on your service.
Right, and I think that's what Kent was saying, it was
Yeah.
100,000 a year
100,000, so-
approximately.
Like-
That's what I was
like Randy
thinking.
said, it's less than legal.
Yeah, it's very doable. And you can take that to 2.5 million and still, because your rates right now are such that
Yeah, I mean,
2.5 may
I would think we could be somewhere around 3%.
at most. The one that we locked
Hopefully a little
in,
better.
one we locked in the other day on an entity that wouldn't have quite the credit rating that the county would have was 2.1. And it was a 10-year.
Well, I can stand fully behind that, like I could the sales tax with the jail. And to see that work out, that was just something fantastic, I mean, for the jail, but to pay it, not the taxpayers. But taxpayers paid every time they bought groceries or get some stuff that pay tax on, yes. But it was doable, and less than $1 million for county buildings is a doable project to me. I like it, I mean, I like the idea. And, well, no matter what you put out first, in your parentheses, or whichever way we go.
Yeah, that's why my thoughts are budgeting for debt service maintenance.
Yeah.
I mean, you're gonna have to put some maintenance on top of that.
And the problem
Probably not a
confronts
lot,
us-
you got a new facility.
problem confronts us all the time. Bryce called about a month ago with that hoist in there. It's at a point in life where the only person who could even come and inspect it, pursuant to the state standard, if in fact you took that literally, was out of Wisconsin. The cost of that was going to be astronomical. And so when he called, and I did too, they said, anybody with credential, engineer, yeah, Well, we have one, but he's not an inspector of that type. That's okay. So, you know, for nothing, we go ahead and have him look at it, go, yep, looks good to me, and send the letter, and we go on. Now, I'm not crazy about that if we ever have a comp-related
I'm not
matter or
gonna
an
stand
incident.
underneath it though.
Yeah, but everything in there has kind of been, over time, just, it's evolved, and we're not where it needs to be at all. To provide the service that they're required to provide.
Chairman, just got a message that the 3 o'clock agenda item is canceled.
No.
The individual has to be removed.
Okay,
They will be able to come.
all right, thank you.
Those 3 items must no longer exist.
Well, I'm sure they do. In somebody's mind.
Okay, but, okay, would the commission be acceptable that anything less than 1 mil put on our budget for buildings? I don't know, or do you want to set a factor of 125,000 a year or 100 for a payment for lease purchase?
Where would you put that at? I mean, in the general budget?
If you put it in the general,
Yeah.
if you put it in the general fund, it gives you more flexibility, because if you do
Yeah.
have to
Yeah.
use it for something else, you can.
Yep.
Yeah. I'd just like to see the line items, so that way you're actively trying to accomplish something.
Right.
And if that money, God forbid, has to be moved, what you put there, but at least you're still keeping it on the list and it doesn't get forgotten about.
And we can save that other commissioner that wanted 500, we cut him, we got it down under 500.
Yeah, we did. We got 2 buildings for under 5.
So do you want that to be
I think so.
160, which is 1 mil, or do you
Okay.
want it to be 120? What do you
Yeah,
want it
that's
to
the
be?
exact number. Anybody want to put a figure here?
A mil or less, that's what I'd
I would
say.
suggest 1 mil.
No more than 1 mil.
Huh? Mill's 160.
160.
That's gonna give you at least, at today's rates, $2.5 million to work with on all these purchases.
For how long?
10 years.
10 years.
10 years at 160,000. It's only one.
Wow.
That's only 1.6 million.
2.5.
If you paid it straight out.
And I took the residual value down to almost nothing with a lease term of 10 years. So we got 120 months at 2.5%, your monthly payment, and then I, took that times 12, it's 13,135.
I take 160.
I would think we'd
I take
Budget
160,000,
1
multiply
mil.
that times 10.
start with.
That's just straight money back.
1.6.
That's 1.6 million. The bank never makes their money back.
But they're doing something else.
There's no
I see
way.
what you're saying, but on the, let's see if I did
But
anything.
for the budget document, do you want 160 in on that line item? Is
What
that-
temperature is it?
Hanging on here, just
Okay.
make sure we know what our monthly payment is.
I'm just,
I,
it's a steal. If we could get that, we can make payments for a mil.
Well, it doesn't make it up how much we just
2.5.
need to start budgeting some money.
Yeah.
We need to make a motion to do that, I'll do that.
this is just for budget.
Yeah, I don't-
Yeah, right. There's no.
We're just
motion.
I
adding
don't
the
think
lines.
you need a motion on this
No,
one.
just the temperature of the room.
Temperature of the room.
We're gonna.
Everybody seems to be pretty good with under a mil.
You keep it at a mil.
Keep it at a mil.
Fund
Please purchase.
Fund the building projects with a mill.
Yep.
Divide it up however the value of those buildings are.
I kinda like the value of the mill, and that way valuation does go up.
More money goes in.
Valuations.
That's what I tied the 1-2 last year was a mill.
But it gives,
Ties in inflation.
gives the project a start, gets a placeholder on the list.
Now we want separate lines, right?
So which is, so if you do want separate lines, not just one blob for buildings, you want a bridge shop,
We want storage
You have to
buildings.
break it out then.
We want a storage building.
but with the total just to be,
Why wouldn't you just do one line? Then we can decide where it goes.
Just list the other two.
We'll list the others underneath of it, one line item as.
One line item gives us a little more
Yeah.
flexibility.
And have projects underneath. It's not 1, 2, and 3, it's just projects.
You still got that flexibility.
Yeah.
right, it's
Picture
just,
project.
the
Well,
only
it's
reason you would
different.
list them separately is just so that it's more transparent as far as what building projects you
Yep.
are trying to accomplish
Right.
at some point in the
Yeah.
future.
What it was doing automatically was a bi-monthly payment, even though it's showing the monthly total. it makes that much difference if you were allowed to do that, but most are not gonna do that on commercial lease, so, and I can't get it to undo that, somehow it's got it in the calculation, for whatever that's worth.
Yeah, so I mean, a $1.5 million building is
Right.
gonna be more than a mill.
Yeah, Joan is right. It's a lot.
10%. What your payments are.
Yeah, unless your interest is only 10,000 a year.
What is
I- It could be.
Kent just mentioned 10 years. What does it go to when you go to 15 years? What kind of percentage rate do you drop to then?
You'll raise your interest rate, but
Yeah.
you'll lower your monthly rate.
Yeah. Right.
I don't know what it is, but I've always just ballparked it when I decided to buy
So
something.
you're gonna get a different interest rate on 5,
Yep,
7,
yep.
10.
I'm gonna make my wife
Yeah.
nervous, so I'll borrow the money.
So Tina, did we give you a number? Did we give you a number?
Well,
Uh,
She just wants,
I'm just waiting for you to figure out what you wanna do. You said put in 1 mil.
Yeah, 160,000.
I think
That's what I know right now, so that looks like one line item,
Yes.
unless you said,
so would you put buildings,
it-
new buildings, or put a list of 3 locations?
The lease purchase.
right.
Maintenance.
I think what he's asked, what Scott's gonna wanna know is, do you want to list out any specific projects? Not necessarily have to put funds by each one, you can if you want to, but what is that supposed to be designated for?
multi-purpose and road and bridge.
So that's storage,
Storage. And then you got a $600 a month payment over here too.
So I mean, we'll have to determine how big that building needs to be.
Based on your evaluation of the building, 1.5, and these are just thrown out there, and this is 0.5. So you're throwing 40K out of that mill there, you're throwing 120K out of that mill there.
And you're finally got it to adjust that if we were able to do something currently and lock it in at 2.5, for example, just as a rough number, you will do a $1.5 million building with a little room to spare. It's $13,883 per month. The total amount, the bank does make their money, is 1.666 is what they're getting out of this. Total interest is $201,000 that we pay, which sounds like a lot, but that's dirt cheap.
Well, yeah, I mean,
On a building of that type.
that's online with what it should be, basically. So at a 120K mark, you could probably run it for a 15-year.
Okay, but let's take those two, and I think what Tina's wanting to know now is 160,000. We got 2 buildings there, but we could have 2 more projects underneath that we're not doing nothing to right now on the deal.
we could do however you want.
Okay.
I just wanna know what you want on there and how you
Yeah.
want it.
What buildings are we?
How do you want to show them in the newspaper?
I'm erasing again.
Well,
What buildings are we forgetting?
You're gonna have to do some fairly good sized dollar repairs on the courthouse, so, with not just the porches, but all that tough pointing stuff.
That is amazing what the cost of that is, especially above the top half. It's terrible.
We haven't even talked about that
We've been on the
recently.
And that's something that's gonna have to happen in the
Just a
next.
point in time.
But I
But
mean, even so,
really-
in terms of any restoration we do.
I mean, I
Yes.
understand that's a big cost, but really in the scheme of things, it's not a big cost. We're talking about buildings lasting for 30 years. This place been here, man.
Yeah. There was several years ago, there was a presentation given to the commission that there's some work that needs to be done at the eve level and above so that's stonework, that's like repairs. And that number was $600,000.
Yes.
And I don't know that that's a trustworthy number, that was a business that was wanting some work, but I don't know that it's not either.
Right. But they divided in the lower half and the upper half, and the upper half was expensive because of aerial.
Yeah.
Yeah.
Trying to lift everything up there.
Yeah.
And we've never really bid that out as far as, any work that might need to be done at the roof fish.
Yeah.
What is it put on a 4th story?
Okay. I think that, I can work with Scott. I think that if I know that you're at that 1 mil level, that's all I need to know. So I don't wanna make it too complicated. I mean,
Alrighty.
there's plenty of time for that later.
Amen.
Yeah.
everybody sort of considerate of that then right now? Good deal? Okay.
And if he prepares it and there's something that you don't like under there, then we can change it.
Okay. Well, I still got 10 minutes till.
Mr. Chairman?
Yes.
Since our next person is here, could we move that up on our agenda?
Yep. Yeah.
And then hopefully the last person will be here about the time we wrap up.
Oh, yeah. Yeah, because 3 o'clock's gone.
Yeah, we're good.
Okay, we're gonna move on to Travis Parma, EMS.
Oh,
They just
and he left.
He's going to get a fresh drink of water.
I don't know the way he took off, he might have got
He
called.
might have got called too, because he did take
No,
off.
he was looking at us, I think he just went to get some stuff out of it.
I'm not coming. I heard my name, I was
Yeah.
standing around.
Well, I know you waited, maybe we'll call.
We like it when, you know, when we call your name, you just take off.
I take off running?
Yeah.
Well, I was a little scared. Not the first time.
Yeah. Okay.
All right. Well, today, I don't know,
Where
if
things
we-
are?
Yeah, if we need an executive session to discuss where we're at on the other item. Or not.
Make that public. We could do a short one.
Okay. Prior to that, I would like to request an executive session for employee performance
Okay.
with everybody in the room, including Mr. Nathan Bringer.
Okay. Yeah, I'm gonna do it again. I move that we recess into executive session in order to discuss personnel performance pursuant to KSA 75-4319B, personnel matters of non-elected personnel with the board, Travis, Nathan, Tina, and Brad, all in here for 10 minutes.
15, please.
Okay, 15 minutes. That will be from 1:50 to 2:05. That's my motion. Do I hear a second?
Second.
Second by Jonah. All those in favor, say aye.
Aye.
Aye. 5-0.
Okay.
Just one second.
Go ahead, Chip.
Still trying to understand.
This conference will now be recorded.
Out of executive sessions, no decisions. Travis, there's another line item you'd like to talk to, wait, talk about.
In executive session?
Executive session again, okay?
Correct.
Is that, it says building this project?
I believe so, yes.
Contract negotiation.
Is this the building that we're building? Okay.
Oh. Yeah. There's gonna be a few of these, I think, because
Okay.
crazy volatile atmosphere we live in.
All right. I move that I move that we recess into executive session in order to discuss contract negotiation pursuant to KSA 75-4319B for consultation with our attorney in matters deemed privileged under attorney-client privilege for the building construction with the board, contract negotiations, yeah, with the board, Brad, Tina, and Travis. For how long?
10?
10 minutes should be more than enough.
10 minutes, be from 2:08 to 2:18. Oh, that's my motion. Second by Kent. All those in favor, say aye.
Aye.
Aye. 5-0. I think Dave said aye too. Dave Crowfoot? Said aye, yeah, okay.
Okay, back at 2:15. 2:18.
2:18.
And it was wrong as soon as I said it. It's just gonna-
This conference will now be recorded.
We're just taking a minute and a half to 2 minutes here, coming out of executive session, we'll wait for, after it's over with, and we'll resume, start over, start again. Contract negotiation coming. Should've just left them out. Does it matter of litigation?
I think that this contract, I hope that's all it turns out to be.
Okay, looks like you're,
Yeah, we got 18 seconds.
okay, great.
I said this. Okay, out of executive session, no decisions, we'll wait till, well, we got one, just got one council member out, okay, we'll go ahead.
Okay, so, I'd like to report that back that Nelson Fowles, contacted me the other day, stating there was gonna be a significant increase in the air conditioning unit, and we went ahead and locked the price in on the air
Good
conditioning
deal.
HVAC side, so. I guess.
Save some money before it goes up.
Yeah. The only other thing I have, I believe, you guys are aware of the monitors, the cardiac monitors that are mandated. The mandate, I believe, is January or February of 2022. The FDA says no, we can no longer use the Zoll M or E series. I have a price for Zoll X series, which we're brand exclusive with Zoll. It syncs up with everything we have. And the original bid came in at just over $104,000. We are just now 2 cents under $100,000. So I conveyed to the salesman that I really need to stay under that $100,000, so we did.
This is in your contract, or your budget.
Do I?
This is in your budget.
This was originally budgeted $100,000 for capital outlay with the intent of getting these purchased. We have spent $12,000 out of capital outlay.
Okay.
Tina, do you remember on what?
Yeah, we talked about it last week. It
Yeah.
was 114, so we're still okay.
Part of it was your air conditioning, wasn't it your
No,
air
I
conditioning?
think it was. But either way,
I don't remember
we did
now,
end up
sorry.
bringing some money out of that, but I do believe that we're gonna be okay to get some of that out of commodity. We can.
Right, so he has flexibility within his fund.
Okay.
Because he won't spend all his other line items.
Okay.
Cut down the grocery store.
Right. Hey, we don't buy any groceries.
Bologna and cheese.
So the-
So, board does need to make a motion, go ahead with, well, yeah, at that price range.
I have it at $99,999.98.
Make a motion to proceed without exceeding $100,000.
2 cents to play with.
Run them together.
Second.
Second by Dave Torko.
Okay, have a motion by Jonah Gearing, second by Dave Crowfoot to spend $99,999.98 for 3 Zoll monitors to be in 3 the 2 main amps, and the third one goes where?
To a backup.
To a backup unit.
Correct.
Okay. All those in favor of that, say aye.
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 Close enough to.
That's what?
Close enough.
Yeah.
By 2 cents.
2 cents.
That is all I have unless commission has anything for me.
No, thank you, keep everything under control.
Right outside the door, Cody just showed up.
Oh. Okay, let me see if I need to discuss anything. Oh, you're fine.
Be careful. I see.
Okay, yeah. Just making sure there wasn't nothing.
Another price.
Okay, yeah, I've got him tied on a few things, so.
Cody on the payroll.
He's on the payroll.
Let's give him an ID card. then.
Now, going to executive session, he can come in now since he's in the contract. Contract negotiations with him, with Isaac.
Yeah.
Okay.
I'm good unless you guys need anything else.
I didn't see the next agenda. item.
Yep, no, that's fine, we.
No,
Yep.
well, I
figured it
did,
out.
but I just didn't
Yep.
process that it was one.
Thank you, guys.
Yep. Waiting for Mr. Isaac Cat, don't know if he's outside.
Didn't see him
I haven't seen him, but
yet. Isaac out there? Is Isaac out there?
He is not.
What, do you wanna take a
5 minutes.
5-minute break?
sounds good. Make it 2:30, that's when Isaac's supposed to be around. Go back and take another 5-minute recession until 2:30. A little over 5 minutes. All right, out of executives, just after break. Getting close to 2:30 here. I don't know whether Isaac showed up yet or not. We'll see if he's outside and call him in.
I haven't seen him yet. He wasn't in the hallway when I came by, so.
I'm gonna ask Joe here, he's outside. I'm gonna ask him to see if Cody knows whether he's gonna be here. Jonah,
He pick up something.
is Isaac, ask
No.
Cody if
He's not
Isaac
here.
coming.
Yeah, he told me to.
He said he was gonna be in.
2:30, okay, all right, okay. He should be here and on the way in just a second.
So Mike's parked out here, so let's talk about
Downstairs.
Is the truck here?
No.
All right, I'll let you have it.
We only had 8.1. Wind blowing.
There he is. He's here. He's here.
Hi, guys. Hey, ladies.
Morning.
Now, you better address that later, or you'll be on wrong.
Range division of
She's
Mike.
his boss, right?
That sort of thing.
All righty, Isaac.
His truck's out here.
Glad to see you this afternoon. You're on the agenda here. What do you have for us this afternoon?
Talk about the heated dock.
Okay.
Contract negotiation. Executive.
Is that correct? Contract
Correct,
negotiations?
yeah.
How many minutes do you think we need to?
15.
15 minutes? Okay. I move that we recess into executive session in order to discuss contract negotiations pursuant to KSA 75-4319B for consultation with our attorney in matters deemed privileged under attorney-client privilege. For that, with the board, Brad, Tina, Cody, and Isaac for 15 minutes.
Second.
That will be from 2:32 to 2:17. All those, second by Jonah. All those in favor say aye.
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 47.
247.
247, yeah, 247. 15, yeah. Is that an aye, Dave?
Yes.
Okay, thank you, 5-0.
Okay, just a second
Been wiped off.
This conference will now be recorded.
You're good.
Yeah.
All right.
Get it. Okay. Just hold it.
Yeah.
Make sure I didn't mishear that he, maybe he is coming in. He needed to hear it taken away.
Out of executive session, no decisions. And Isaac, we're gonna turn it over for you to some other business now that you have.
Yeah, not a whole lot. I just want to kind of give you guys a little update. We did have that storm come through on Friday. Really, a bunch of trees and limbs and stuff down. Thankfully, they all fell in places that didn't really cause any huge complications. We've got them pretty much everything cleaned up right now. There still is one very large tree down by the low water bridge that we will be getting to as soon as the water comes down a little bit further. The other thing is that I do want to make you aware of, really late Friday night, early Saturday morning, we realized from all the rain, there are 6 large washouts on the back side of the dam. They're classified as a mudslide. And I mean, it moved a lot of ground. we lost probably 6-8 feet in a couple locations. So Randy Frank came out he came out Saturday. We went and looked at it. This morning, a gentleman with the state that has done the dam inspection out at the lake in the past, he came out to look at it. He's gonna do some assessment. He took a bunch of pictures, but sounds like that is something that is gonna have to be looked at. It's gonna be a pretty big project, I think, by the amount of damage that was done. And like he said, I think the last time the dam was inspected was 9 years ago, and it was placed under low hazard. Typically, he said they do that about every 5 years. Since it was knocked to low hazard, he said that they'll do it every 10, so they plan on coming out next year. But now with this happening, he said that they're gonna have to do a full assessment of the dam. But I just want to let you guys know, he said he was going to be working on it and he'd be in contact with me and Randy. But it does sound like that's something that's going to have to be done. That was really the only major problem that we had. Everything else really went well. A lot of residents and people out at the lake helped us pick up all the tree branches. I think we got majority of everything already cleaned up and ready to go. But I did want to kind of keep you updated about the dam there, because that is something that's going to be.
Does it need to be temporarily shut off? Maybe close?
Didn't make it seem like that was too big of a concern. I mean, and it really, because I mean, it's up by the road.
If we don't do anything about it, something bad happens.
Yeah. And he made it seem like it was fine for the time being, but it's definitely something that's going to have to be looked at. And the other concern is if it washes away anymore, it's up to the backside of those pillars. So if it washes out any further, some of those pillars might start going too. And it's in sections from pretty much all the way from the shop all the way over to the other end of the dam. So it's pretty major. He didn't act like we needed to close anything down or that there wasn't any major concern right now, other than just the integrity of the dam. He wants to make sure everything's good, and but he didn't say anything about having to close it down. I could ask him about it if you want me to.
Well, he'll let you know.
Yeah, well, I figured he would. And he didn't say anything about it this morning when we were over there looking at it. But yeah, it is something that is going to require some work.
So, right now, you haven't went out and opened it up to lower it any faster or anything? It's at a set pace?
So yeah, it ran over the low water bridge until about 8 o'clock Saturday morning, but it started running over the spillway Friday night. And really, kind of what I've noticed, once that spillway starts going, it stops rising. Because it leaves the spillway faster than anything can come in. So what we've been doing now is the only water that's leaving the lake leaves from that tower there by the dam. So we've just been having to go out every day and clean out all the debris, because all that debris gets sucked into those holes. So we just go out and clean it all out to make sure that water keeps running down. And we'll continue to do that as it keeps dropping. But pretty much all the flood water, everything's done running in. The only thing leaving now is coming out of the tower. So we'll just keep that clean and let it slowly drop back down. But that was pretty much it for me.
Any questions? Anybody? Just a good thing to.
Are we gonna have to have some more tree work done out there in this contract, so?
I think so. Yeah. There's some bigger stuff that I can't get to by the trailers that is hanging, that broke, that didn't completely fall. There's a couple of dead trees, especially after the wind, that are leaning a little bit, that we're gonna have to cut. Pretty much, if it's not in a fall zone of anything to cause problems, we'll cut it. If there's something that it could hit as it's coming down, I always get somebody out here to do that. And that's kind of the way that we handle that. But yeah, there is some work that we're gonna have to bring somebody in to take care of.
Okay. With no other questions, then thank you, Isaac.
Thank you.
Appreciate your time.
What about the roads?
Yeah, so, and actually this morning, so that's another real big thing. With the rain that we had, the road situation's awful. Just washouts from both residential and lake gravel roads. A lot of the residents the roads on the outside of Lakeshore Drive, you know, all their gravel has washed out onto Lakeshore Drive.
It's all in the.
Yeah, through Lakeshore Drive.
Blacktop.
What we are doing right now, because Road and Bridge is so caught up, and I talked to Bryce about this too. They have that small little single axle dump truck. This morning, when we got done cutting up a bunch of the trees and stuff and got it hauled off, they are lending us that dump truck. So we are just going to be hauling gravel, probably for the next couple days, to do both the lake roads. We're gonna store some, and the places that are really bad, we're gonna try to help out. It's the best really we can do, and I know, because like Bryce said, they got so much to take care of themselves, and they couldn't bring us rock, and so I said, well, if we can get a truck, we can haul as much as we can. But I know some of the lake roads, I mean, you can't, even in a work truck, it's not fun to drive.
I know over the years, we've discussed the responsibility that the county has to those roads, which I think in essence, we don't. But we have. So.
Yeah. Well, and I know, like, over the winter months and stuff, there's been times where we've gone on the tractor and gone back and tried to help out. During the summertime, we really normally don't, just because we have other stuff to take care of. We don't have a lot of free time, but it's bad enough, I think, that we can definitely get some gravel put on those roads. I mean, they need it. In case there's an emergency or whatever the situation is, they're bad.
You're keeping track of all your loads of rock and everything?
We are. And I'm hoping it's not gonna be, we're not gonna be able to make everything perfect.
No.
But as long as we can fill in all those washouts, because I know even in my work truck, there's a couple places you don't wanna drive down.
Have you taken any pictures? I'm sorry, I stepped out, but are you documenting like photographs of what you're doing?
I have not photographed the roads, but I can. I
think
did
you
photograph
should.
the entire dam and everything, and I
Do the-
photographed all the trees and stuff that came down, but I
Do
have
the
not.
roads too,
Okay,
because
well,
anytime we're spending money to fix that storm damage,
Okay.
we need to be able to document it in
Perfect.
case we can
So
get
maybe
some
FEMA
reimbursement.
might give us a little.
I can definitely do that.
Okay.
In about 3 years.
Any other questions? Thank you, Isaac.
Thank you.
4th of July.
We're go. We got everything lined out.
Okay.
Well, 3rd.
The third.
Third.
Yes.
The cruise.
Yes. Yep. Everything is a go there.
Are
We
you
got
gonna do
everything.
those at dark or?
Yes. The music will start at 6, and then the fireworks will start shortly after dark, probably about 9:30.
Any vendor coming out or?
There's not a vendor coming, well, there's a cotton candy vendor coming out. They're gonna be serving cotton candy. There's a lake group that will be serving, a meal, chips, and a drink out of the lake hall. So there will be a meal being served out of the lake hall, yep.
Who's shooting fireworks?
Rainbow Fireworks out of Inman.
Okay.
They're gonna be the ones doing all that.
Okay, they contracted with them?
Yes, correct.
Oh, okay.
Yep. And pretty much they have all the liability and everything covered. We filled out a special event permit with Sharon. Pretty much the only thing that they require from us is a place to shoot them, and we have to supply a fire truck, which we got all that lined out.
Cool.
And their certificate of insurance is with the special event permit?
Yes, yes. Okay.
All right.
Okay.
Well, we've come to the end of the agenda. Tina, do you have something else to add yet, or anything?
If I do, I don't remember.
Okay, all righty. That's typical for some days.
Right?
Go into public comments here at the end of the meeting. Nobody's opening their mic or anything. All righty, then we're gonna move on to commission comments. Any commission comments today? Just tell you that we did, I seen it personally, like I said earlier about the storm. And there was a lot of water come down between Marion and Albany and maybe north of Peabody in there. And I think in the Gossel area, there was 5 inches at least in Peabody. I don't know what else. I don't know, some of them was even over that.
11 in Albany, I heard.
Yeah,
Shots.
Albany and through there. But like I said, when I traveled through that area, there had to be a downburst. I mean, a lot of rain there for a while, so I hope everybody's halfway getting back to normal. There's a few houses had water in it, Peabody, south of me, and
And water rescue. and what
Had
else?
water rescue, that, and then they brought the boats down. That is something that, since you said that, Kent, you know, that 26,000 that we was talking about and have talked about, they come, City of Hillsborough come in and ask for it, you know, the Fire Chiefs Association didn't vote for it, then they come and ask us for it. And I don't care what anybody says, in Marion County, you're gonna have some water rescue at some time. And I'd just like to say thank you for the guys that do that and did that. I don't know that we
Trained for
donated, and somebody else
They
paid
went out to the
for it.
reservoir and trained for it.
And trained for it and stuff
Yeah.
like that, and,
They were ready when it came.
yeah, so, kudos to them for doing what they do in our county. I wish that was another topic brought up by maybe us even, and that money that's alerted to alone, or put out to the side,
Yeah.
you know. So, I don't know when, you never know when you don't wanna have to use it, but you never know when you're gonna use it. And that was just exactly, but anyway, thank you to the guys that did that, because I appreciate them very much. So, that's my final comment. If no other comments by anybody, Brad, anything? Okay.
What's the schedule for Wednesday?
We have, it's 9 o'clock.
9 o'clock.
We have 2 road hearings at 9 o'clock.
Okay.
That's the one for that mile on Limestone.
Limestone,
Between
yes.
80th and Highway 50, I believe. And then the other one is that bridge it's gone, you
Right.
know, over on 160th off of Sunflower. But we couldn't find any record that it had ever been actually officially closed by the county. And so those 2, they've been published. So that'll be public hearing at 9 and then, you know, one immediately after the other. Then we have payday and just a little bit of regular business.
Have me the agenda item, the way we do a closing. Have that for me too, please. I don't
Yes,
remember that,
okay.
but-
The steps for the hearing.
Yeah,
Yes.
steps for the hearing.
Okay.
Okay, thank you. And thank you, Dave.
I
And
got your stack.
I make a motion to adjourn.
Second.
Second by Dave Mueller. All those in favor?
Aye.
Aye. 5-0.
Get kicker.